in that plus or minus 1 band. All the big stocks, where the money's being hidden, is going to support it to 21 continuously. So the next one in this group is now, NOW. Oops. Another common theme, you got an acceleration of earnings in this quarter, and you're continuing the acceleration. You got a good uptrend. The moving averages are moving. There's a breakout from a 4 to 5 week tight. Earnings are stellar. So here's another leader in this group. There's a third one. Paycom, Workday, WDAY. And this one might be the one that beats them all, because this is an IPO, and they just turned on the earning machine. And if that number doesn't give you insight, look at these numbers. They're starting to print money, and it's at you got a nice. So here's your stands lift off from stage 2. So you're starting stage 2. You got a 3 week, 3 week, 3 week. You got a cup with handle. The handle's forming with a 3 to 4 week tight. So I basically have my money. I've given up on Paycom because I kept getting shaken out, yet it was an uptrend. So I'm learning my lesson. I'm in Now, I'm in Workday, I'm in LOGM. And they're basically, if the uptrend continues, these are taking off, and this sector is now back. I think it's just at 41. So when it moves into the 30, we're golden. And oh, by the way, SMH. Anybody notice what happened today? What I've been preaching all 2017? Pay attention to SMH. Go to the monthly chart. You got your new high, all-time high printed today. So way back over here in 2000, it's not even on the chart anymore. 101.69. This went up to about 101.80 something. It didn't hold it into the close, but you basically got the all-time high printed. So semiconductors are still in an uptrend. So one of the things, I don't know if you've been paying attention, the equipment group, I told you the last phase of the semiconductors always lead, but the last stage, the equipment will go by the wayside. Why? Because the manufacturers got to get all that equipment they just bought, put to use to pay for it. So now they're in the ramp cycle. All the equipment's been installed. Less bookings are going to happen for the equipment. So one by one, you're going to start seeing the equipment guys say earnings and guidance are going to slow. UCTT, AEIS, those are the first two shots heard in the equipment world. Equipment's gone from 1, and now it's going down to 8. Okay? Let's see. The manufacturing fabless companies, they're, as of yesterday, 30 and 31 industry group. They just went to 180. So during this correction in August, so they're coming back up, and they're assuming leadership. So you're starting to see the 2 analog companies. Help yourself, come on in. ADI and Texas Instruments are still in uptrends, and Texas Instruments just reported earnings and are continuing to go. So, anything else anybody wants to see before we start? We got about 5 minutes.
So we got somebody new? Yeah. Been here. Do you do IBD? Have you done anything with investors.com or IBD?
Not yet.
Not yet, okay.
Yeah.
So the first part of our meeting would be good for you.
I just bought AVG today.
Did you? So let's go through a couple of the semis. So on the monthly, you had a consolidation here that basically came into near the 13, go to the weekly. So Apple breaking out of its little consolidation is basically giddy up for the vendors that go into it. So Broadcom is the main one. You got a nice base on base, and see how the base basically forms with a near touch of the 40. This past 3 weeks basically held the bottom. If you draw that line, never got close to it. You got another 3-week tight, and you basically have a base on base just waiting for it to break out. So the other ones in this group, Skyworks, this is another fabulous. It's breaking out this week, SWKS. And this big hint, when you see the insider buying as it's coming near the 30-week or the 50-week or the 40-week is a good sign. The other, so this prior uptrend, a lot of the semis have these prior uptrends where the 3 to 4 week tight were the last breakout before the consolidation. And if you drew a straight line across there, that's essentially where the support line held. And now you have a breakout of a base on base structure. You could have gambled and bought a few shares at the 40-week, but as it came up through the 10-week and the 20-week, that was your buy point. So I added a few shares on this week at about 108 to get in. So the two semis I'm in right now are Skyworks Solutions and NVIDIA. So NVIDIA is the other one we want to look at. So every story, whether it's Bitcoin craze, the new gaming systems by Nintendo craze, all these electronic crazes are all demanding the chips from NVIDIA. So if you don't think they're going to have one more glory report, so one of the things that you can do to kind of anticipate whether the October quarter's coming up, you can kind of see we're not quite into reaching $1 a quarter, but based on the estimates, these estimates are getting kind of low based on all the upgrade reports that are coming out. Every time you see an upgrade going up to 200, I think these are going to be fairly low. The return on equity continues to grow. When the 2007 top and 2000 top, a lot of the two over-owned companies, there was 3,400 to 3,500 mutual funds owning the over-owned companies. We're not over-owned yet. Because Apple might be one, but look at these tight consolidations. When you start seeing these, the best of the stocks, the last opportunity you had was this 30 touch of the 30-week line at 96, and immediately you basically, what's O'Neill say? You got the flag to hold. I wish I held those shares, but I essentially started buying them back at this 4-week tight.
Yeah.
So, and it's going to 220, 250. I don't know.
They keep raising the estimates. The people keep raising the estimates.
So they report next week. We'll see how the market's doing. All the, I mean, these red weeks. Yeah. This isn't selling off. This is mutual funds gaining position. This is what when you see that kind of action, the traders on the floor are basically, I want to buy $2 million position for this mutual fund, and I'm going to pay the volume-weighted price, which means they're going to demand that it stay there. That's why if you get frustrated watching the pin action on a daily chart, or I stopped looking at the daily on the stocks that I have conviction on.
Yeah.
Go with the weekly chart.
They're buying this up to 220 for November in options on the call side.
I know.
Real big.
It's heavy volume.
Real big.
So this doesn't show it, but if you go look at the daily, the pocket pivots on NVIDIA are they're subtle. But if you can learn to identify subtle, you're in business. So you did have a shakeout right there that was immediately bought. But what was the market doing that day? The market was shaking out. That was the one down day last week. That's the day that the VIX arrow printed.
Yeah, but look at the way.
So what's the VIX arrow tell you?
Okay.
If you read that paragraph, it basically says the short term is basically done. We're about to turn. Put call ratio went to 105. And then came down to the 21. It didn't even touch the 21 EMA.
Yeah.
So you got a chance of this breakout. So the one thing, if you look at the skyscrapers, this big pink day didn't take out that. This is the subtle point that I'm wanting to make, is you got it. This blue bar took out that blue bar. You're basically got blue bars dominating. So you got a pink bar that doesn't come up close, but it's taken out. You got this pink bar doesn't take that one out. Yeah. So you basically just want to keep the blue bars staying positive. When you, if you go look at BABA real quick, BABA is the trickier one. So but BABA was finishing up another. Yes, we had high volume, but again, this high volume, if you look at where they closed Friday to Friday to Friday, this was a 4-week tight pattern. So these pink days, yes, there was some selling, but it's dominated with either you don't have further price deterioration, and you're not setting lows. And this ascending base, and if you got the handout, you got the BABA chart that basically shows you how it identifies the test. This is an ascending base right here. Or at least if this is the ascending base that Market Smith is confirming, this last part right here is an ascending base within the third structure.
So it's 18 after. We should probably go into what I want to do. You already gave, so you're good. See how far I go from doing this. So last month, we had a couple new people, and I said we should make for someone like you that's new, that doesn't have a clue what the heck we're talking about, or may, how to get up to speed on this. So we're going to make up a list, and everybody in here kind of put their input into what they think. Has everybody in here read Matthew Galgani's Getting Started?
Yeah.
No, show of hands.
Yeah, show of hands. Yeah, this is interactive, so.
You got to help him out. He's low on energy.
I'm low on energy, yeah. So you got to.
So don't make him work.
If I make it through this, I'll be happy. Right. So I'm thinking this probably, in degree or disagree, should this be like the first book people read? To get somebody that knows nothing. What do you think?
That's the one I started with.
Yeah.
Right. See, this didn't exist when I started.
That was the William O'Neill book, right?
No, this is done by Matthew
That's
Galgani.
a newer one, okay.
How to make money in stocks.
Yeah.
This came about after the meetups came about.
Right. So Matthew Galgani did this one, and I think it's a simpler because Bill's book is a harder
Could you
read.
pass that around so we can
Yeah.
Yeah,
get the
because
title
there's
off?
two by that same name.
Yeah.
Different authors.
Right, Matthew Galgani. So go ahead, and I'm going to make a.
If you want.
If you join this group through Meetup, I'm going to make under
It's much
the.
easier to read.
I'm going to make a tab that has this list. There's one now, but we're going to make it a little better. And then I'm going to do a printout. When someone comes, of us trying to tell the person all this different stuff. Say, hey, you want to get up to speed? You want to really do this with us? You need to spend, I think you could do it in 6 to 8 months. Real easy. You can do that book in 2 weeks, 3 weeks if you want to. But it's a good basic book. So then from there, the next book that we've started using a lot is this one.
That's a good book.
And I think this would be number 2, even though he talks about bases, 1, 2, 3, 4, they're different. So in this group, I told Dave we need to start calling them stand bases and IBD bases. Because IBD basically is running in the second stage base of a stand base. And we have 4 bases inside the second stage base, and then it tops out on into the third. So we've got a real opportunity to have a really good trading platform. This is where Dave's coming up with holding and only using weekly and monthly charts. And this is where we're coming up with the indexes. This is something we haven't had for 4 or 5 years. We have both done pretty well, but we do not hold the winners well. This is going to give us that. So this, I think, is number 2. Has everybody read this? I think everybody.
Love that book. It's an old book. It was 30 years old, so
I'll pass that one around. Write it down. If you haven't read that, it's from 1984. It holds. It's the only book he ever wrote. His service is like $45,000 a year. Yeah, he provides for the mutual fund. It's a really good book. You'll have to read it like 3 times. The first time through, you'll be amazed. The next time you read it, you'll be even more amazed. There is a lot of good information in there for anybody. How to set stop. And yeah, it's in 1984, but it super applies today. So then the third book is actually Bill's book. This is the one I have now. There's 3 editions of Bill's book, and I think everybody in here has probably read that.
Yeah.
Yeah. And yeah,
That's the one that.
this is the better one because it's got 100 charts in it. They're all marked up for you. This is your third book, I think, to read. What do you guys think on this? Am I doing the right order?
Yeah. So
Okay.
send that around. You want that edition.
Right. Because
It's
you want
either-
the markups.
It's either got a green cover or an orange cover.
Or if you want to buy an older edition, but you don't get the charts, you want the green or the orange on that one because it's got the charts, and those are invaluable. Yeah, you can just take pictures of them. So if you're wanting to do this and you want to come back to this group and know what we're talking about, if you go through Matthew Galpiani's book, that'll get you a start. Okay, and along with that, those 3 books, and then I think the other thing that's helped everybody a lot, and we've all did it 2 times in a row, is to go in and do the PowerPoints that Bill O'Neill made that I've got listed in the Meetup site. The 13 training PowerPoints. Has everybody been through those? You may not have been.
I have not.
They are invaluable because Bill and another guy made them up. After you read those books, you go through those PowerPoints or do it with that.
You give me the address.
We did those for training. They're from like, what are those, like 6, 8 years old?
Meetup group.
You've been through them. They're really good. They show you the whole thing laid out. It doesn't take a lot of time. I reference them all the time. So that would be the next one you do. And it's under pages in the Meetup. And it's the 13 PowerPoints. So I think that would be the 4th.
Go to pages.
So,
the pages tab.
why don't,
on the Meetup site.
can you write this down for me? So that's the 4th. I know what the first 3 are. I just need. So I'm going to
What do you want me to write down?
the PowerPoints.
You remember
Okay, you can just use
IBD?
it. So you can give it to me. So put 1, 2, 3. I know what they are in order, and then the 4th thing, do the 13. Does everybody agree that would be the way you would do it? Because we want
A lot of this.
I say it, so it doesn't say that.
Yeah.
to. We want.
The guy that started.
We want people to be able to walk in here, get up to speed in a quarter of the time it took us.
Yeah.
That is my
It took
goal.
me years.
It did, and there's no reason for that. I think I can bring somebody on board in 8 to 9 months if they want to really do it. Does anybody agree with that?
I think, but basically they got to get used to the terminology, you know.
And then by the time you're through those
it's a
3
different
books,
language.
yep. By the
It's like
time
learning
you're
a foreign
through,
language.
by the time you're through those 3 books, you do the PowerPoints. You're going to have the language down. Then some other books that I just have in here of my own, which you guys got to tell me if you want to include any of these. Those are the basic ones. So I got.
Oh my God.
This is just a small selection of my library from the last, 35 years.
I see the first book I ever read.
So one of the,
You want me to write all these down?
well,
This
we're
is
going to
about
put
1.5% of my library.
This is a good book. If anybody, and it's not really got the technicals and all that, but it really gives you about the psychology. That's what this book's about.
That's very cool. I like it.
Yeah. So, and then another one is Darvis. That's another psychology book. And this guy traded without seeing a frickin' chart for weeks at a time, months sometimes, and made millions of dollars.
How do you do that?
He read the tape. And so Dave is trying to
actually
imitate.
My hands.
What Dave's doing is imitating this.
So is that about the tape more than anything else?
Yeah,
It's about the tape. This is
Now,
good. If you
I-
haven't read this book,
I will
so
read that then.
okay, so I think. So the people that have read this, would you agree this might be going to be the second book?
That's a very
Yes.
good book.
What's it about?
Can I see that again? We'll pass it
Nikolai
around.
Arbus.
That was.
I was a dancer
When it comes to
back in the
varieties.
50s and made $2 million.
So guys, this is the Darvish box.
Boxes, yeah.
This, you draw a straight line between the lows, you draw a straight line between the highs. Every time you go to a new high, on the third new high, that means a breakout into a new Darvish box. So what you're wanting to see from Baba is a continuation up so that this becomes support now. Okay?
So his system's not real hard. So
I would say that's the fourth book.
which one?
The
Fourth
Darvish.
Darvish. All right. What else have I got in here?
I turned that down.
Which one? Now I've got shorting. I've got one up on Wall Street, Peter Lynch. That's a good book
That's
for
a good
everybody
book.
to read.
Yeah, that was the first one I.
If you want to know how IBD was formed and you've never read this book, just to understand them, that's a good book to read. Because it tells you why he made Investors Business Daily.
I've never seen that.
Yeah, and I just happened to run across it. It's a good read. And then I read this book probably 20 years ago, Market Wizards.
Oh, yeah.
That's a good book.
I just ordered that book.
So that's my kind of, I've got like 8 or 10 more, but these are the ones I think. So we got, and this is a technical analysis one that I've used. Scott, you definitely want that one. Okay, so with that in mind, which one do I pass next? That one? This one? All right.
Name of that one?
The Battle of Wall Street.
The Battle for
Low.
Investment and Survival. You want that on this list?
Yeah. Okay, and then I would say Remnants of a Stock Operator. And then by the time you read all these others, you're going to want to read this one so you just get a break. Because it's a lighter read.
That's on Audible too, that.
Yeah, and a lot of these are. And that one you could do Audible. A lot of these that are real more technical, you could probably run through Audible once, but you're going to have to sit down and underline, buy your own book and write it up. That's what I do. And they take, you can read through them, get up to speed, and then go back. And these are all referenced. So I don't know what you guys want to, if any of these are of value. What's everybody think if any of these others though? This is one that Wyckoff did of Jesse Livermore's stuff that I found. It's kind of a short summary of it. Gives more of the, I don't know, it's just a short summary of it. It's pretty good. And then short side, William O'Neill. Don't even mess with the short side until you get a lot of this accomplished because it kicks my butt all the time
I still don't.
Yeah.
It's tough. It looks easy. It's tough. Now, if we go into severe correction, it's going to be a lot easier, and we probably will play some of that. But right now, when we do go short, I start pulling this book out. Yeah. So, what do you want to do? Are any of these others you think we should give to a newbie, or just forget those for now? What's everybody's thought?
I would say that's it for the newbie.
I like this.
I think he's got plenty to read right now.
Yeah, well, it is, but you know, this is going to be their training for like a 2. When I originally started, we'd have new people come and they'd say, "How long is this going to take me to learn?" And I'd tell them 2 years.
Yeah.
Before Matthew Galgani's book, it was 2 years, and a lot of people got up and left.
Is there a YouTube channel for?
There is for Matthew Galgani. I think that's still all up.
Actually, if you go on to investors.com, one of the things I encourage you that signing up for an account with investors.com is free.
Got that on the list.
Oh yeah, we got to put some of that down. How to go through. So this one's a good read too, Amy Smith. You know, if you want some motivation, I can actually do this.
I like it.
That's a good one.
Actually, that needs to be on there too, because
Well, I
that
think
tells
they
you.
honestly all do. That's a lot. So one up on Wall Street. If you haven't read this, and
I
you're
wish I was in
afraid,
that book.
We're going to get in that book. That's our
we're going to
goal.
put our group in this book.
We're going to write this book.
Well,
Part
because
2.
I think putting Stan's stuff in with this and using that is key. Because all you got to do is have one big winner a year.
Then you can
that
keep
does-
the rest of it.
They all kind of
Well, we
tell
all,
the same
I think
thing.
we've all learned together.
You know what I mean?
So any others we should put on that list? Is there anything?
Well, I've got the first 3, then I just have the
Darvish.
PowerPoint, Darvish, and Battle for Investment Survival.
There's a lot of them.
Just different.
Yeah.
different ways.
A lot of.
If you're into technical, allow now.
That's
You
a lot-
if you
that's a lot to do.
yourself, it is, but you start slow. You know, goals not reached overnight. But and you know, if someone new comes in here, they have to know that this is not like come here, get a list, and leave. It's not. You're not gonna lie.
Yeah.
Have you ever seen that?
No.
Write that one down.
I have a suggestion, Sam. Just that's a suggestion.
That's what we're here for.
Yeah, because I read both Matt's and Amy's book that we saw on Big Island in Hawaii. There were no interruptions. I just sat there, enjoyed the whole day. Really.
I kind of like this because
That's
Just a joke, but I like it.
that's a visual on the
Yeah.
island.
Okay.
That's a good one. Day on that. It's like a little bit of a day.
You know.
I start to wonder.
You would- and got more
Yeah, I
advanced.
just, it's hard.
Not really more advanced, but it has test things. I try to get one that's marked up a lot because it's got questions. It goes through basic.
You don't want that on this list, though.
Videos all the
No,
time.
that's for you.
Kind of get up to speed. It's quick, easy. You know.
So that was it on that.
There's other things.
Now the other things.
Oh, really? Yeah, that's good.
So the other things that I think new people, we should probably write on that list. Get on investors.com.
Yeah, there's a lot of information.
Then get on the website.
You get on the website. So what do you think the steps should be from there? If someone says, okay, they should get on the website.
Get an account so that you can get all the free information.
Right.
Go through
And
all
there's
the videos.
there's good training on the website. Put that down.
Training?
Yeah, there's video training. Videos.
Investors.com, right?
Yeah, so when you're sitting around at something and you got Wi-Fi and you're bored out of your mind, you can watch that.
So when you sign up for an account, you don't have to really pay them anything.
You don't have to pay anything, but it allows you to you can access a lot of the stuff from your phone.
Okay, so let's finish with that. So like you said, you can access a lot of stuff. We'll go through a little bit tonight, just quickly, because I'm going to do what I do every
That's what the PowerPoints
So one of the
are.
things that you can do
That's what the
is,
PowerPoints are.
Sam,
Yes.
when we go
No.
on to
The
the,
PowerPoints are on Meetup. Put Meetup PowerPoints.
But that's the website.
What's that, Dave?
we can go through investors.com without you logging on, so that we can see what we can see without having a payable account.
Okay, I can do that. But they won't be able to get the VIX and all that.
Got a free trial going on right now.
Yeah, and there's free trials, so you can get a free trial. Investors.com is not that expensive. What is it a year? $325 or something?
Yeah.
And you can, if you don't like it, you can cancel after.
And
And they give you a prorated discount.
Yeah, so it's really not. And you know what? If you get it, it's worth it just for the weekend edition. If you have no time to read it all week, get the weekend edition. That's what you do, isn't it? Just read the weekend.
I love getting the paper one because I sit down.
Well, he still gets the paper.
Yeah, yeah.
I
When I do the digital, and I like to sit down and just open the newspaper up.
I download it on my iPad and I sit in my easy chair and I go through and I mark up all the stuff I want. Sometimes I'll have my laptop with me so I can instantly pull up some charts in MarketSmith. You don't have to have MarketSmith. You know, that's going a lot further. You will get it after you, if you're truly into this, because how many people we got in here? 1, 2, 3, 4, 5.
I love markets.
We're 50%. You know, it's a grand a year.
Smith is, yeah, 1,000 a year.
Well, it's about 1,400 with everything you need on it to get the markups and everything that you really need to grow up to 250. You don't need it, you know, and we use MarketSmith because we can show everybody all the stats. So I feel bad somebody comes here like you and they don't know where we're at, and there is hope. It's not undoable. It's actually a lot simpler than it used to be, I think, because all of us have been struggling with it for 3, 4
I use MarketSmith, but I don't use the Growth 250.
So we'll go into investors.com a little bit, then you can get some ideas on that. And you may leave here today and say, I never want to see them guys again. Because we've had a lot of people that slowly filter in here, and it's been good for them. We've had people filter in and leave. I had a guy that he's retired in Florida, and I used to sit all day, 3, 4 hours. He doesn't do that anymore. He makes 3 and 4 times more money than. And he's not logged on tonight. Usually he attends. Let's see. Well, there is somebody. Well, this is Lynn. Lynn likes to attend online. So this is online. I do try to record these meetings and post them. I like that because then you can go through them faster if you want.
Oh, that's the other thing. We got 3 recorded meetups where the IBD guys came and gave a presentation.
We need to write that down too. Now I do have a Facebook account for this, and one of those I could post the others. I should and in the meetup. So this is the other thing we got to decide. How are we going to feed this information to people?
I would just keep it in the meetup.
Yeah.
Because that's what I would do.
You know, the thing about doing this, the more we teach people, the more we learn. That's the biggest thing. I never wanted to do this. I never wanted to be the presenter. I got stuck doing it.
Look, I come up from Indianapolis every month to teach, so that's helping me.
And how much have you
Because
learned because you do that?
the more you teach, the more it forces you to understand what's
You know, and
going
this is
on.
interactive. If you disagree with something, please speak up and ask why and stuff, because that's what it's for. It's for you guys. And we end up with people in there that come all the time. I know that, but I'd like to get some more new people, and I think this is a way we could. So, what did we just say we needed?
The taped.
The recorded sessions, those
Right.
are.
There's 3.
Is that on the website too?
That it's on Meetup. I'm gonna when I get a chance, I may not get this together right away. I'm gonna try to put this in a nice format. I may even have my wife program it up on something just so that you can go in there and click on it and get through it.
Recorded guests.
You know, and I'm probably gonna put them in my Amazon bookstore, so if someone does buy them, I get 80 cents or whatever. But if that's
You got a
all right,
bookstore?
yeah. Well, she does. But you don't get much. But it's an easy way because you can put them all in there and people can find, just right through it. So some of them are in there now. And I do put this stuff on Facebook if you guys want to interact that way. Meetup's good.
You just don't know if it's fake news or not when you go through Facebook.
Yeah, well, and I'll throw some articles, and believe it or not, I got quite a few people that look at the Facebook thing just because, when I post our meetings there some, and I'm a little careful what we do post because I don't want everything out there. I'm not so worried about posting and maybe I should ask, is posting our list anymore so much? Should we post that or not? I posted on Meetup. You have to be a member of Meetup.
Keep it on Meetup.
All right. Because we do have a list of stocks that are the ones that are the leaders in trade. So that's kind of it on that. Let's go and do something else. All right. Good. So I hope that's going to be helpful for everybody that's new. And then we're just going to hand them a list and say, hey, if you want to stick with us, here's what you got to do. Hang out at the meeting, you'll learn. But you may not understand what's going on. Don't give up on us. Because otherwise, we just blow right over people's heads, and they're sitting there going, this is not for me.
So has anybody attended any of the the workshops that they've done?
Long
A
time.
bunch of them.
Level 1, level 2?
Yeah,
I've
we
done
should
level 1 and
probably
2.
Yeah, long
Two's
talk
great.
about that before we go into.
Because one of the things that you guys want a refresher, I have a couple copies if you're going to bring them back, that I can lend them out for you to review over the month.
I actually have. What do you got?
I have one level 2 and I have 2 copies of the level 1.
I think I've got level 2 at home somewhere.
But if
You're
you
right
guys
down.
want
You write
to
it
just a
down.
refresher,
Write down what he's got.
Take one for my son. If no one else wants it, I'll bring it back.
Here.
My son just started.
Write down what he has so we know what. And I used to lend these out, and they are very helpful.
well, these are CDs,
CDs.
Audible CDs.
So level
Which
1,
one is
level
that?
2 CDs.
This is level 1. This is level 2.
So, and is that CD or DVD? It's probably DVD.
Well, they're DVDs, I should say.
Okay. Well,
They're all DVDs.
all right. So, and I have some on mine. Can't even get some of those. Some of those cost like $1,000, $1,200. Yeah. So you want them back.
$1,000.
If you borrow mine, we'll get your name and number and maybe even a credit card. Because if I have, and that won't do me any good because I can't buy it.
Nobody wants to take it out.
Well, you lend it out, and if I were you, I'd write it down just so you know. We should have like this.
I know where
is
he is.
well, I'm
That's
telling
where
you.
to find him.
You forget. So I've got a few more of those. Next meeting, I'll maybe bring mine, put the list together.
When did you get that, Ben?
Oh, I got 5 copies of this.
No, not the level 1.
How'd you get 5 copies of it?
How many years ago was it?
I don't know.
Yeah.
They haven't updated this in a long time.
Have they done any of those meetings, level 1 lately? They're
Yeah.
doing that.
They don't do them anymore.
They're doing the
So I did this. This was bought in 2010. This
It's
was the
still
last
good, though.
update of this.
I have chart school, I have short selling, me both have early entry. Those are like, not going to put your hands off of those. You know, I'd maybe lend it out to somebody that's been here a lot that I know. Like you guys, I'd let you have it, but most people are new. I'm not because those are just, you know, I paid like, I don't know what, $700 for that one.
You paid at least $700.
Yeah.
To go to the class, yeah.
Well, no.
These are the,
Sam,
log into and show what they cost.
Yeah, where are we at on that? I haven't looked at it.
Look at the bookstore.
Where's it at? Where's the bookstore at?
Where's your menu? Let's go to the menu.
Yeah, see, this dumb thing goes to this.
You talk about the home study program?
Store.
Yeah, the home study course.
Yeah, there's 5 of them.
Yeah, and they're not super necessary. We've got them, so we can.
Yeah, if nobody takes it out.
Anybody wants the level 1?
So there's the courses: beginning, intermediate, advanced, market school. I don't have market school. I don't think. It used to be chart school.
They just made that available.
I have this one.
It's too expensive.
I have this one.
I have this one.
I have
This one's
that
not
one.
worth it.
I don't have that one. Try it.
See, right now you can get a 4-week trial for 99 cents.
Can't beat that. Model stock is super expensive.
I'll borrow that.
Sam, just a
Don't know.
little trigger. Every year, right before Christmas, you get $100 off of all these programs. I see it every year.
That's when I bought mine in November.
Yeah.
They'll do Black Friday here.
They give a loan.
If you want your own copies. I think if you get the books and borrow ours, you're pretty good. You know, since we're willing to lend them out, I mean. And I rewatch them and stuff too. And then, so along with that, you have your training in here. See, where's that at? How to invest.
University.
Yeah, see, they don't. IBD University. So there's a lot in here. They didn't used to have this either.
And this is brilliant. I think this is a great, right
And
there you have
this-
everything you need.
I need to put this on my list. That maybe they ought to be doing this at the start too.
Sure.
Go ahead and write this down.
The biggest thing is sign up for
Put it
an
right here.
account, and there's just
What?
tons
This
and
is
tons of
IBD
free
University.
video.
IBD University, right.
Yeah, and then just put a parenthesis on it for me. So this is really good. The swing trading.
Does anybody here do the swing trading?
I swing trade, but not
Not that way.
this way.
Yeah.
All right, so from there, should I log out of my account so it looks like what a real person does? Or we just want to do it private?
Let's just do it regular.
All right. So the first thing you're going to do every time, I do this on a daily basis. You're going to come to this page. Oh, that back. Can you pull it back? We don't need the little goblin sticking his head.
Is this your
Suit problem. Just says no good. That way I won't forget. So we have this main page. If you hit Investors Business Daily, the ones with P you have to have an account to get into. The others you don't. And which one's the big picture? I, every day, click through the ones I want to read. They're mostly the articles you need to read are here, and these 3. The first thing I do, though, is I go down here and I look at stocks on the move. And I expand it. This is where you're going to keep seeing them in here. See, there's T-Rex. 25%.
So the whole point behind CanSlim is price movement and volume movement. So when we talk about basis, it's when the price starts moving up with a big volume spike. So that's why we go look at the stocks on the move, because it's prorated. Number 1 stock is the biggest percent volume move. This means all the institutions came in and bought some stock today.
So what
It's not mom and dad buying.
What we're trying to do is track the stocks that the institutions are buying, follow them with their run-up, and get out before the normal thing that happens to small investors that gets dumped on buying. We want to get out before they do. That's Bill's whole thing. If you read that blue book about the paper, that's what he designed it for.
Okay.
That's what this whole website's for. So we usually look at these, and I'll look at the losers. And then which one of these is the big picture?
That one
Right there it is. It says big picture. So you want to read the big picture. If you can, read it every day. You can read it on your phone. And this guy's pretty good at writing these. I don't know, do they change who writes the big picture on them? Yeah.
So the video has become worthless because they're filming this in the morning in Los Angeles. So it's basically capturing the market at the middle of the day when it doesn't mean anything.
So I tend to turn it off, and I like to read, and I hope.
And the reason why they did that is they're trying to get the millennial crowd in because they're paying attention to their Facebook account. If you haven't picked that up by listening to these recently, that's why they moved it to so that they got the people trying
do
to
we
get
want to go
in.
through all this or just skim it?
No, let's highlight. So one of the biggest things it tells you is what's moving. It tells you if the volume's moving. The biggest thing is this market pulse.
Yeah, look at this.
It tells you what the move is. It's telling you that it's not just a few stocks. When they say breadth is improving, it means more sectors from the market is improving. It's not just 5 stocks, Facebook, Amazon, Apple doing the leading. When you see distribution days, all that means is a % decline on heavier volume than the day before. Typically, when the market comes under pressure and we go into a 10% or more correction, it is caused by selling at the top where you have high volume declines on higher volume. And typically when that number gets to 6 to 7, you want to pay attention. So right now, in October, there was about 4 out of 5 days where the market went down on higher volume each day. And those are the 4 distribution days on the NASDAQ. S&P and Dow were still going up, but the NASDAQ was under pressure. So, but on the S&P front, the S&P's just the 500 biggest stocks, there wasn't much selling. But look at when you see this outnumbered of leaders on volume versus, you pay attention. And one of the things that I do want to note is you pay attention to the names that are in here, because when you start seeing the leaders that have been leading the market, you pay attention. That's been one of the leaders in the semi-equipment company. They had a sharp move today on lower volume. And so it basically just tells you a summary. We got the Fed meeting coming up. It tells you when the last follow-through day was. It tells you about the bonds. And the reason why that's important is because there's the Fed meeting this week. And Dr. Copper, they say, is a leader, a PhD in economics, because when you're buying copper, you got industries that are expanding. You got building going on. You got China's going into another expansion. Typically, it's what that's meaning these days. So then you got the charts. And one of the things that this is typically 1 day behind. So although it said we're up today, you notice how all the stocks are divided in 5 classifications. A, B, C. So this is accumulation distribution. So the A's are the ones that the institutions are accumulating shares on a bigger bite. B's not so much. C's neutral. The ones they're selling are rated D and E. You want to be buying stuff that's in the A column, okay? You want to be avoiding stuff that's in the General Electric. Everybody's saying it's a bargain. Let me tell you something. It's so deep in the E category, you don't want to touch it. Everybody's buying it for the dividend that's going to go away in 3 weeks. Don't do it, okay? So you want to avoid the play down here and buy the good stuff. Now, yesterday we had a distribution day. The market didn't say we had a distribution day, but it tells you we lost 117 A's.
Yeah, and this topped out at 12.
So let me just, in the spirit of things, although this used to be somewhere around 1,200 to 1,300, at this peak right here, all that's telling you is we got a healthy dose of sector rotation going on. That's good for a market uptrend that is basically going straight up from this correction that happened here. So don't be freaked out by this. You primarily want to make sure that the number of A's and B's outnumber the C's or the D's and the E's. So pay attention to those ratios.
And after you watch this for a year, it'll click in your mind. It's really interesting watching.
The other thing to note is the advanced decline line. When this is making new highs, that's the point of emphasis in Stan's book. Chapter 8, when you get to Stan's book, Chapter 8 is all about the market summary. So the big picture is the market summary from IBD. Chapter 8 in Stan's book gives you the market. One of the things he tells you to understand is this advanced decline line. Notice when we're making new highs right here, this is making new highs. Typically, the market doesn't top out with this making new highs at the same time this is making new highs. There's a negative divergence. What I mean by that is we'll be up here, and this will not make a new high. So we're not quite there yet. So all this is a healthy consolidation that is subtly happening. So when you get opportunities to buy or add at the 21 EMA, the 30 EMA, you take advantage of it, okay? Put-call ratio. Also, tops, going along with this, tops don't happen until we print a close beneath this. Put calls are, a call is the traders are betting the stock's going to go up, puts betting that it's going to go down. When too many get to one side, the market typically goes to the other side. So when this gets too low, that means the number of calls, the put-call ratio, there's too many calls versus the puts. So there's not enough, so you have a very low number. When this prints a very low number down here, there's a top coming within the next 2 to 6 months. That's where you start paying attention to that advanced decline line and stuff like that. Right now, we're not there. However, when everybody thinks, oh, the sky's falling, you watch the financial news, everybody's thinking, if you watch financial news, you'll never be invested because they're crying chicken all day long. Don't watch the financial news. Go to Investors Business Daily to learn. However, when we got consolidations like this is the 50-day moving average. This is healthy. When you get the put-call ratio betting, okay, we got this far, and it closed below the 50-day, now the world's going to fall apart, and we're going to go down another 10% real quick. Everybody's betting too many puts, so the put-call ratio, there's 1.2 to every call to go up. That's everybody's betting to one side. When everybody gets on, it's psychology on display. Market tends to disappoint the majority of the masses. So when you're at extremes, bet the other way. So we're in a pullback. You get a signal of 1.2, put some money to work. Find something, go to the stocks on the moves list, look at the paper setups, the mini charts. It will tell you what's good, okay?
I'll buy the index.
Or buy QQQ. QQQ is the NASDAQ 100. It's the top 100 stocks that are non-financial on the NASDAQ exchange. The other thing to note is the mutual funds. These are 20 of the best mutual funds that Bill O'Neill has looked at. When this is in an uptrend, it means all segments of the market is healthy because this is small cap growth, small cap value, mid cap growth, mid cap value. It's everything. It's the 20 best managers from those different investments. And this is what they call the relative strength line. When this is also printing new highs, as this is, it means the market breadth is good. Okay? When this starts diverging going down, while this is going up, part of the market's under pressure. You got to go find what part of the market's under pressure, okay? Then one of the things that the paper has is, here's the top 50 growth stocks based on fundamentals. This system is based on fundamentals and technicals. We buy on technicals, but we want the selection of the stocks that have the best growth and the best sales. Sales builds future earnings. You want both. So what this is basically their list of the top 50 stocks, and this gives you a list of the top moves, whether they're on volume or not, but these are the 10 stocks that were the best of the IBD 50 list. And then the new merchandise, Microsoft came public in '86. It was like when we were in high school, if I would have got a present of 1 share of Microsoft, I would have been hung over the moon. That was an investment of a lifetime. Just 1 share you would have made. So watching the new merchandise, that's where you get here. So paying attention. The paper gives you all this idea. That's why if you want to get serious about making money investing in stocks, buying the IBD subscription, it gives you this, it spells it out for you.
And you won't read the Wall Street anymore. Right?
You won't go to Wall Street, you won't go to the financial news, you won't go to Twitter, you won't, this is all you need.
I think the paper does a very good job filtering all the fluff, the real actionable information.
So just so he knows, at the bottom of the big picture every day, it updates at what, 7?
Somewhere around 7.
So was it updated today? It was, wasn't it?
Yeah, that was just...
Okay, so there's a link down here.
Yeah, show that link.
View the general market indicator page. That's really good. You know, a must every day at a minimum is to read the big picture and look at that. Right?
Yeah.
At the very minimum.
So the other thing, we talked about psychology. We're going to the market trend section, and it basically goes through a section of the psychology. I have mentioned put-call ratio. Well, it kind of spells out the...
So the big picture's on here. That link there for me doesn't work all the time.
It doesn't, no.
No, it don't work.
It takes you to the
they're breaking. As they roll out new things, things are breaking. So just send them an email, they'll get to it. So these are 5 ways to keep track of the market. We record these every time. The VIX is basically an indication of the fear on Wall Street. Put-call ratio is a fear gauge. The high-low ratio is simply new highs on the market divided by the new lows on a daily basis. Healthy is 3-to-1 ratio. When it's below 1, when the lows are outnumbering the highs, it's a very weak market and you're in a correction.
Now these are premium products.
So you do need a subscription. So either the digital, which gives you the IBD.
For somebody new, this might be getting a little bit advanced, but if you just start looking at them and reading them, you'll get it after about 2 or 3 months. This is something, when did we really add doing these? 6 months, 8 months that we really started?
Well, they added this a year ago, and as soon as they added it, I went right to it.
Yeah. So in our meetup here, we've been using
really.
Yeah, it's pretty new in our world.
So one of the things of caution, it also, they go interview the professional money managers and quiz them. Are you bullish today? What's your portfolio like? And based on that, it tells you, well, this is getting toppy. Doesn't signal the top. It's just somewhere in the distance there's going to be a top closer than later because it's, well, when you have the number of bearish people higher than the number of bulls, you want to be buying. So this opportunity in February was a lifetime of 2016. It was a lifetime buy because that's where the market was, 2000. It's basically gone up to 2,600 almost, and you could have bought it at 1,900. So just buying the S&P 500 when you saw this, that's good. But when you get this gap of 40 or more, it's getting the other side. When the bears are outnumbering by about 10%, that's one extreme. This is the other extreme. So just be aware. We had a look in March, basically the summer into the end of August, September, we had a correction. And that's what the correction looked like from they only went down to about 50%. So they weren't overly done. And that, you see how the market flatlined right there? So.
Where you go this? Or you want to go through it?
Let's go. I primarily wanted to look at the high-low.
That's come down a lot. I said that's come down a lot.
Yeah, sure.
A couple weeks ago.
You want to look at the
Do you like my prediction? All right, we got 4 days in a row. It's going down to the handle.
Yeah.
So one of the things, before you click on the chart, so the high-low ratio, to get the raw data, you have to go to this page and see what the number is. When it's above 2, the chart that we're going to show you stays flatlined at 2. They're saying the healthy, and it is healthy. You got, for every 2 stocks make a new high, you got 1 make a new low. So that thing, we said that February. Oh, yeah, this is only this year. We don't have a 2-year chart. Good. I mean, we don't have monthly either, do we? So in August, I told you that we were correcting. You see how we came down to 0.5? That means 2 new lows for every new high was being made. That means we were in a correction. So typically, if you read this paragraph, whenever it goes below 0.5 and comes back up, that is basically telling you money managers are putting their money on the line and they're getting long. You need to follow. How do you know you're wrong? Is this immediately comes down and will go back below 0.5. In other words, there's a huge amount of new lows being made. But when this gets back up to 2, pay attention to it because it will tell you. I keep track of the raw number because I want to know when it peaks out.
What did it peak at this time? 8?
About 13.
13. Hung around 8 a while.
That wasn't that long ago, was it?
No. It's fun to watch it come down.
Yeah.
You know, every day you're like, okay, so it worked its way up slowly, and it's working its way down slowly. You're like, okay, when it gets below 2, how's it going to happen? As you're watching this. So here's the next thing we'll look at is the time saver table. So the time saver today, I record 95 and up, so we've got 50 on up.
So today, O'Neill basically ranks every stock with ratings. Composite rating is an overall score for the health of the market. You want to be buying stocks that are 99 or 98, certainly above 95. So this is the stocks going down, but they're ranked. This time saver table, this is the best 50 stocks on the upside.
I'm trying to pull it over so you can see the volume. Where's that?
Oh, you got more at the top.
Is it the top?
No, there it is.
Where is it?
Bottom. There, that's fine.
Okay, so we can see the volumes. And then I'm going to go through it backwards. So we've got our lows. These are the ones losing on volume. So it's interesting to look in here and see what they are. Go rallies again.
See if you're stopped.
I use this for a shorting list on options. Yeah, see if your stock's in there. You're like, oh, hold up. GD, that's been one that's rained.
Amazon then. That's all.
+3. You don't want to see your leading stocks in RTX.
My painful holding.
AEIS. Look at this one. Advanced Energy. Paycom tomorrow may be in there.
Did they go down after hours?
Yeah.
6% after hours.
We'll see.
We'll see what happens tomorrow.
So here's Take 2. This is on the upside with volume, which is good to see. There's T-Rex today. Darn it. EA blew up some, not a lot. Trade does. LTIH homes, no volume though. CBOE, no volume.
So this is a stock that we watched and that they invested in, and that's been the stock of the year.
So the next time we get one like that, we're going to buy shares.
I had it for a while. I look at the other stuff.
And the other one's right here, the video.
It's still running.
This stuff.
Here's YY.
I have 8 minutes.
Sector.
All right, be careful with AMET. Make sure you have your stuff defined because you've had 2 of the leaders break down.
Give your YY All right, so that's the time saver table. Look at that, you'll figure it out. New highs, new lows. So what do we got today? 161.54. 3 to 1 you're looking for. Unless. So we're pretty good yet.
So we're still above 3, but we're still in the...
And then something, since they finally got this fixed, I like to hit this button here. Check.
And looky there, it's the chippers.
This is where how you.
But this is where you pay attention. For the last month, it's been all the equipment names. There's a subtle difference now. Now you got all the manufacturing,
Here's
and you got
look how many buildings are.
Yeah.
Finance, electronics, software.
So this is a good shopping list right here. The who's who.
And that was up top.
CRM, the other one in that
Here's
group.
energy starting to appear in here after all this time. You know. Business services, medical, machine, utility. You can do this on the downside too, but I like to look at the upside. I look at this every day. It's just a quick scan. You can do it in MarketSmith too, but this is
Should you sell LRCX now? Is that what you?
I would identify a
write it down and we'll
stock.
talk about it when we get to it, because we're getting close to being through with this, I think, aren't we? What else do we want to do in here?
So as you're looking at those, are you looking to buy in or?
What you're looking for to see here is what sector. You want to make sure the stocks that are on your watch list that you're buying are the ones that are leading the market.
All right, so the next place, let's go look at the IBD 50 so that we can show them what the paper looks like in the mini charts. Because you want to basically...
So this is their proprietary, however you say it. You're having problems with it too.
Yeah.
Just make it more good. Proprietary. These are the leaders.
So just click on one and then it'll...
What if we do, which one do we want? What
Just click on that right there.
Okay, so this one's the number one right now. This you want to go through on the weekend and look at these. What's really nice about this, you'll see, let's be quiet. This right here. This is how you learn. They mark it up for you. It's in the paper too, that's why I still love
So
it.
these are the mini charts. They basically update them twice a week, Wednesdays or Fridays. The Friday summary is in the weekend paper. But unlike if you have the weekend EBID, it means you got the weekend paper digitally. You can also get a printed edition if you want the hard paper. But what it does is basically, this is how all you do is click on the chart, and it's going to allow you to scroll through them one by one. And the number one stock basically says forms flat base on base at 145.40. So when you hear flat base, that's also saying a Darvis base. So if you read that book on Darvis, that's where...
You're getting pretty far in.
Okay. But this is the flat base right here. You got resistance here, you got support here, and then you break out into the next base, but you don't go far and you consolidate again. So here's the second base. So what they're saying is as soon as you take out that peak right there at 145.40, it's advancing again. So what you want to see is volume come in. So volume didn't really, that's on a weekly. So on the weekly, it's not coming in, but you can go look at the daily to see how it's doing. So, and today it did break out, and it did break out on good volume. So this is the relative strength line. You want to see the relative strength line make new highs at the same time price makes new highs. This is the 50-day average of the volume, and you want to see the breakouts occur, breakout going to a new high level through resistance, through that buy point on big volume. The volume needs to be bigger than the red 50-day line. So every day, you don't need a charting service, you have it right here. So then you just go scroll through the next one. So number 2 on the list is damp, and it basically tells you it had a buy point at 212 from right here, a cup with handle. So the book, How to Make Money, will explain the chart patterns, but basically 212.75 is this point right here. There's your handle as you tested the 50-day again. Now you're advancing, and you didn't really, well, that's on the weekly again, but you can assess the weekly. You got the RS line confirming the new high, so that's one that's getting a little extended from the 212. You want to buy within 5% of these buy points.
So go through the rest of the stage quickly. It gives you the leader group leadership. It gives you a bunch of green dots. You want a bunch of that because that's a leader. When you're doing the 50, you're going to have that. Gives you. This is why IBD is so good, right there. You get all that information without digging all over. You can get that from your brokerage company, but these are in a format that works. Once you learn.
He ranks all the stocks into 197 industry groups. You want to be buying when the industry groups are in the top 40, preferably the top 20. So this is a good sector. It was in the top 10, so it's pulled back a little bit, primarily because a lot of the stocks, they pull back when they're consolidating, building bases. So now they should be moving back up as they break out. And the stamp, ABABA. So here's a 4-week tight. So whether this hit the line or not, you can draw it several different ways. You can try it.
I did lighten up a little bit, so I still.
But it's breaking out again from a 4-week tight right here, so who knows? So there's a heck of a deal. 2 months. So now you get, for $10, you can get 2 months. So that's about 9 weeks of the service. So that's pretty good.
By then you'll know.
So you can basically flip through the charts. So essentially the opportunity of a lifetime was when we had the market correction where the market went down, the indices went down 20% in January and February of 2016.
Over and over again.
Basically, we had the buy of the lifetime when we came back through here. So if you bought that stock down here at 54 and sold it at 200, you made your year.
Right here
Yeah.
was a really good place to get it to.
And every time it comes into the consolidation of the 10-week line, gives you a buying opportunity.
All right, where do we want to go from here? We'll go through some more of these, or what's our better view?
You made your what?
A what?
You said you made your, did you make?
It's a major buying opportunity.
Oh, major year.
Made some money.
Okay.
Of course, it wasn't on the IBD 50 back then. Was it?
That was the sector leaders.
And the big thing was, if you would have done it.
Okay, where are we going? Back to market still.
Let's show the videos.
Let's just show them some of the.
That's a good trend.
So IBD videos is basically what you want to, the investing, you're eligible for the webinars. So the webinars, there's plenty of webinars that basically tell you how to buy stocks. You get the service, they do a special webinar about once a quarter that goes through the system. Sign up, you get that for free with your subscription. So those are always good. If you can't attend the webinar, they always post them online. They fall under this link, under the videos. There is thousands of dollars of free research. For the $200 subscription to EIBD, you got a ton of free information available that will help you. Okay? And by the way, that blue book by Matt, the #1 book, it shows you the link to all the videos that get you started. And if you just go...
It's called Getting Started.
yeah, literally, it's that simple.
Well, once they came up with that book, we were all like, man, I wish I had this a long time ago. We used to listen to this.
Los Angeles. It's Monday, October 30th.
We don't as much anymore.
Dave, have you ever looked at that AGF that they have promoted at FFC for the IBD 50?
Yeah, well, I was going to show that when we go to Mark. Are we listening to this?
No, I don't really. I used to like to listen to it. It was really good.
Let's get started with our market.
But there is some good stuff in there yet, because they are putting them up. They're talking about the base, if you're not as advanced as us. I think there's still some really good. For the millennials with no time span attention, it's probably pretty good. You know, you're going to need to take your studying a little further than that.
After a big day for Detective Never
Yeah.
Friday.
Big day, a lot of the big cap techs breaking out, very, very powerful move, very nice to see.
Dude, are you warm yet?
Yeah, I'm warm now. I keep turning down to 69 again. Okay, so where do you want to go? Where do you want to go?
Are you overwhelmed yet?
I'm intrigued. I'm taking it all in.
All right, we're going to go to the more advanced portion now. So,
Which is why we gave you a list of what books to read, so you can get there with us. But what we're telling you is we can get you there a lot faster than any of us. It's not fair that you can get there faster.
I will. If you put a few hours in, I don't know what your work schedule is, but if you can put a few hours work in and come to the next meeting, the best thing I can tell you is as you're going through, have a journal, write questions down. Bring your list of questions to our next meetup. We'll go through every question. We'll show you how to answer every question. I haven't had one person pick me up on that offer yet from the newbies. I'm looking for a first person to do that so that we can.
Because he learns.
We want you to succeed.
Well, he learns from that too. We all learn because those are the questions that maybe we never thought of.
Because if you hear something in a different way, and it's going to help these guys because you might bring up a question that might turn a light bulb on for them. I continue to go through that stuff. I continue these videos. I got every take-home class except for 1 or 2 of them, but I will review those. I'm always giving myself education material. So I'm rereading the books. I'm rereading Stan's book for the 3rd time this year. And I've had it for 3 years, and so this is like the 5th or 6th time. It just helps you. So keep a journal, write your questions down, come back, and we'll get them answered for you.
And there's no question.
All right, let's go through the market real quick.
It never goes there.
So one of the things, they just did a webinar on the IBD 50 for the ETF. Have you guys looked at that ETF?
That did the 50i? And now that's the reason I asked you. Is that really?
If you compare it to the Qs and all that, it's outperformance. It outperforms the Qs. It doesn't outperform the 2x leverage stuff, but it does outperform if you buy it at the key intersections.
It's not wanting to go. There it goes.
So before, let's just FFTY, and then we'll go to this list. It goes to the weekly chart. So we all know the correction basically ended in February 2016, right? You had a follow-through day.
Our guy's still with us.
So look what happened in February 2016.
It's monthly. You want to weekly?
No, just keep it somewhere.
Well,
So on the weekly, here's the 10-week moving average. As you're coming down, when this basically came up, when the 10 crossed in June with Brexit, that was a buy opportunity. But you could see where these points of support, see this huge volume bar in February, where it only stayed there a nanosecond and basically closed at the top of the range. That was an indication. So if you wanted to put some money to work, you could have put a position on with this ETF, buying it essentially at $19 and have a 7% stop in case we went into another draft. And then as it comes up through, as the market resumes, you get the follow-through day, you add a little bit more. You complete your position when this basically stays above and you have the 10-week leading the moving average. That would have been a good entry at 21. Today, 34 divided by 21, that's 58%. And that's a portion of your portfolio that you basically, you're in the market. It's the IBD 50. It's the best 50 stocks. You don't have to manage it. Make that one of your positions, and that's what you're trying to beat against.
Dave, is the FFTY related towards more emphasis on the first time?
I have no idea. I haven't watched the video. There's a webinar that they just posted yesterday. You go through that, they'll go through all the weighting differences.
I think
all I know is
the top 10 or 12.
they made changes to make it more accurate.
What do you think on this?
There's another ETF out there, isn't there, on cloud computing?
Because that's one that always scares us a little bit.
But this is...
All right. Devil's advocate, I must be feeling better. Sorry.
But when it's an index, who cares?
Yeah.
It's basically the market.
I've been burned on those before, that's why I say that. So that's pretty wide. But this is a good index. Don't rush out.
All I can say is,
yeah, don't rush out and buy it now.
I would not buy it now. I would buy it when it comes into the 30-week line. So your last opportunity, and that's one of the reasons why I put the 150, because you see how this...
You can buy it when it breaks through here if you want to play it quick, which that's not what we're supposed to be doing.
Look, one of the things that...
Because there's your pullback.
The 50-day line, this is hugging the 50-day line.
That's the beauty,
going up.
really. From here forward, from right here forward, breakout stage 2, that's a beauty. Really, until now. And here's your first day. I call that an inside-out day. This is an inside-out day because it closed lower. That's my own stupid.
That's the market selling off that day.
Right, but it's testing the 30, and it tested it, and it bounced back above it. So that's a good sign, and it's got volume today.
So the easiest way on the ETFs, this is a low-volume ETF. I don't care about that. What you need to do is, if you're playing this game of bid and ask, you're going to lose. What you need to do is go to the weekly chart and have an order in. This is where I want my entry. Your entry, when you're in a correction, the next opportunity is when we're in a correction, we have an opportunity. So the next correction is just the one thing, you've basically been living below the 200-day. So this is the stage 4 of Stan's book. Here's the start of stage 1. Why do you know that? Because you're testing the 200-day, or the 40-week line and the 30-week line. You had a close right there, and typically the middle is the close. So this breakout above here is the start of the stage 2 advance. This becomes your stage 1 forming area, and the other clue that you got is all your moving averages are coming together. So if you can draw a line of support, and one of the things that I tell you, when you start noticing these 3 weeks support areas, this is the easiest way where you can get long. So if you look at that last 3-week line right there, click on that one right there where the dot is, the closing price. You put an order at 22.17 going across there, you would have bought that follow-through week. Or if you want to go down and pick that, when you start seeing this 3-week tight, okay, I want a close when price comes up through the 40-week line. What's the 40-week line coming through here? $21.40. So somewhere between $21.40, $22.40 is a good entry where you could have just stayed long. And then, based on Stan's book, when you come out of a stage 4, especially with indexes, you need to understand this on the indexes, because all indexes of any shape, they do a retest. There will be a retest. So when you have all 4, a downtrend going like that, and you reverse this, it is always going to test the longest average. Because if you are believing the trend reversal, so if you miss this, you place an order in at the 40-week line to get that retest. Or halfway between the 30 and the 40-week, I don't care. Somewhere in this white space right there between the green and that's your retest line, and you still get in below 23. 23 to 34 for holding for a year, you can't beat it. You can do add-on shares as you know the market. Look at nobody's selling. They're selling all the way down here. Here's your other big clue. When you get the capitulation, the indexes do this, especially the small cap indexes, the Russell 2K, the micro cap index. If you're looking at those indexes, that gives you strength in this. And there's your introduction, but there's 1, 2, 3 clear wave, or 1, 2, 3. I don't care how but clearly you knew the market because we had a follow-through day in late February that this market was taken off. So on the follow-through day, you buy a little position, and you just keep monitoring it. And as you recapture every gain, the next moving average, that can be an add-on. So as the moving averages are going from 40 on top to 10 on bottom, as they start flipping, an uptrend's 10 on top, 40 on the bottom, and then go. You don't, but I will tell you, on the indexes of these this is the small cap index, okay? That float told you it's a small cap index. The volume's telling you it's a small cap index. 3-week tights are basically saying there's a possibility of consolidation. The market will tell you. But I will tell you right now, the next market correction, this is going to be one of the things that I add. This will be a long-term holding position.
Absolutely.
And I'm basically the first $1,000 when you got these 3 waves coming down, when you see that big volume week, you basically at that Friday close, you buy it. You buy your first $1,000 position of it. It's a low risk position. And then that would have paid dividends. Because if you bought right there, that would have gave you an entry around $19.
Yeah.
And it went up 60%.
Yeah.
So your goal is to beat 60% on everything else. If you're not, then you need to be, every time it comes to if you're not outperforming, every time it touches the 10, if you get it to the 20, if you get it to the 30, you just build. The market, the Qs and the composite will tell you. The other thing, if you're falling, so I guess that's a good introduction. So with that's the 20, go to the daily on these indices. So one of the things that I told you, on these indices, that's the 21, right?
Yeah.
1021?
Yeah, we changed it.
So right here, at the end of August, you knew, based on the indices, that they weren't breaking down to the 50, and we were basically barely just at the low end of the -1 range of the 21. That would have been a good entry just to go add on to your position. So every time that you have those add-ons at the 50, so we had a consolidation. And also when you see the put call like we did on Holy Thursday of Easter week, when the put call ratio printed at 1.42, you buy a position. because that's the extreme, that's the holy grail of the put-call ratio telling you to go in and buy something.
Yeah.
You want something to buy? If we're breaking out and resuming the uptrend, if you don't know what to buy, go buy that ETF. Because it will go up. I've basically been studying that all week because as soon as look, when they put those webinars together coming out of their research and development, they got it. Webster, I think Webster's still the one leading that department. And he does good work. And he's not going to sponsor it unless it's there. So when you start seeing that, you go after it. So the Dow has been leading. As the composite, it is stalling a little bit, catching its breath. It's coming into the 10-day moving average as the NASDAQ is going. What's your next one? The composite. So oil, financials are kind of hung up, but this is still a good uptrend. When you get this much white space between the 21 and the 50, you want consolidation. That's not healthy. It's getting too parabolic. But you don't want parabolic moves. You want the 45-degree angle. Composite is the 45-degree angle. So we basically had a great 2.5%. So I will tell you right now, whenever the index is closed above 2.5%. So today, how far above the 21 are we? And that RS line confirms that. So we're at about 1.9. So when the most I've ever seen it gets 2.8% above the 21. So this is healthy. So look at this. If you put the line through here, the NASDAQ, the RS line was in a consolidation phase. It was either going to go up or down. Well, Friday, it gave you the loud answer which way the market's going. The market's not ready to roll over yet. Mm-hmm. So if you're betting the market's rolling over, you're on the wrong side. S&P 500.
And it's slowing to a halt.
Is yours working?
Yeah, I think it was good. Updating.
I was having trouble with Market Smith all day today.
No, I rebooted my computer once.
I haven't been much on my Smith today.
I thought it was just me. You want daily or that's a good thing?
So the daily, we're in good. You had a test last week of the 21 that was immediately bought. So good. So we still have a couple weeks through. I think we're at the 60% mark at the end of the day tomorrow through earnings. So you still got 2 more weeks of volatility. So don't be surprised if we get some more shake and bake. This is still telling you we're kind of in a consolidation. This is yesterday's close. This doesn't update until later tonight. So the mid caps and small caps are kind of doing an extended test. They're basically, you see this powerful move.
Yeah.
You basically want this to consolidate. So you're basically building. As long as this is forming, this is a nice bullish wedge. So that's a good consolidation pattern. And the big cap, these are the top 3,000 stocks that, confirming the same thing. They haven't updated with today's price action. This one has. So we had a sell-off in the small cap, so you basically want this RS line to break out of this little channel. But again, you got a bullish kind of wedge going on. And the other thing, we've got a year of consolidation from the November breakout from the election. So this is a firm breakout, and all you're doing is doing a back test. So this is a back test. So if you want to start building small cap and make, like if you're a Schwab customer, building the SCHA and SCHM positions, that's a good way to put them any to work. But look at this. This is a beautiful chart. When you've got, and look, we're just now starting to expand. So if it breaks out there, you want to be long the Russell 2K.
We'll just held the 21.
So the IBD 50, which is that ETF, the FFTY, this is the index that it's tracking.
So the FFTY, does it beat the Russell 2000 index over time? The FFTY is it?
Well, I don't know over time. The rest, it's only backdated to 2 years or whatever it was. It wasn't around that much. It started in 2015. But has it outperformed the small caps?
Yeah. 2015.
Well, since the market bottom, it has. Because it's at 57%.
Really, that FFI, whatever, is just now where you're going to want to be trading it, because it was really an IPO base. They established itself, it did that downtrend, it started at the top. So now, when we get the next correction on it, you can start buying. You didn't miss anything. You did, but you didn't. You know, it's going to be good to use.
Hey, go to the weekly chart. It's this same chart.
Wow.
So you can back test it, but they basically, you go, well, the thing that you can do just to convince yourself is click on that box right there. And add FFTY. So if you want to know if it's outperformance.
Oh yeah.
It's doing a good job of tracking.
Why? The webinar will tell you that the top 15 are weighted more. So I'm assuming this is the market weighted index. The best of the best is at the top. So
that's exactly what William O'Neill would do.
All right, so put the Qs on here. This is another game that I love. If you want to know, so, and it just defaults to a year, so it's a good starting point. And it, and look. So QLD. So how does the steroid version of this? That first version of what they put together was a piece of crap. It didn't follow the market. This one's following the market. And holy cow.
Also, that's the this climate is favorable to the IBD style investors. Anyway, last 1 year has been favorable.
So to get the outperformance.
Yeah, you could go ultra shares.
So the QQQ is 30%. So to get the 2x leverage and 2x the risk to be 51%, you had to go to a risky product.
Oh, yeah.
Okay, so if you're a Schwab client, go put SCHA right there, just to give you an indication. So this is the Dow Jones Small Cap Index.
So the QLG is a 2X?
SCHA.
Yeah, so it's 2x leverage. So it resets daily. So the options that are tied to it, there's a decay factor that you lose a little. It's not quite 2 to 1. Although that is more than 2 to 1, though.
Was it SH?
SCHA. Huh? SCH for Schwab. A for small cap.
You gotta click on it below. Up there.
It's on there.
It's there.
Yeah, it's in the orange.
At the top.
This one?
Yeah.
So put in.
Click that.
Put in. Type in.
Let somebody else do this.
You're fading again.
Okay, so
So
I am.
the small cap is typically outperformance, but
I like to trade stocks. You guys
look,
have your-
our
you have
system,
mutual
when
funds.
we're in an uptrend,
Option trader.
NASDAQ is where you want to be.
Sure.
Canceling growth stocks is where you want to be. This is your safest entry. And look how it does in corrections. That's the other thing that I like about this. The small caps, the reason over time, long-term time, these will outperform, but short-term, when they're telling you when the market's in consolidation. Okay? But if you guys, this is a great tool for using it because it shows you where the performance of the market is.
I didn't even know that was there.
Yeah, I did. You can put whatever in there. It's really handy if you're running two screens.
Yeah.
Big Cap 20.
So Big Cap 20 is just confirming that big boys have thrown their weight around. But you do have some, like the biotechs are falling out like crazy. The big boy pharma tech, Celgene.
Yeah, we have to look at that. Pogler.
So the 85-85 index. So you see how this is kind of getting parabolic in nature. We got a correction at some point coming because this is not sustainable. Because the last time we were here was in the 2013, and we basically ran into that buzzsaw that we saw in October of that year. But that led to one heck of a, we already went through that market because we had several doubles that if we just stayed with our guns.
Yeah.
So they're identifying leaders again, but the Facebooks of the world are coming back on this list, renewing their presence. So Facebook was added last weekend. So who knows about gold and silver? Who knows about Sam's farming career?
Yeah, everybody laughs, but that controls a lot more of our economy than
Now's the time to do it, right?
But look,
when was the time? Look here, look at that.
Can't go lower.
oh sure it can.
Look at that.
It's an all-time low.
But you know, you laugh. The grain we export there hits a lot of dollars.
I
It's
just
gross
love-
domestic product.
I know. Just supply.
Now it ran really too high, and now you got to have that, big time pullback and just.
That's a big time pullback.
We're going to have some farmers losing their equipment and stuff probably this year.
In Hamilton County and Hancock County, the farmland is just being turned over to right now.
Well, farmland's still screaming high. People are paying $8-10 grand to afford to do that. It's ugly when it does. It's on too long for us. That's what it is.
All right, you want to go through stocks now?
Yeah.
Do we want to do picks, or do we want to go through the list? We were doing picks earlier.
Let's see how the list or the screen showed.
Which would you want?
The 90s leaders. So one of the things that I tweaked this so this when we get into a correction and the stocks come on this list, between the stocks populating on the sector leaders and this 90 list, those are the stocks you want to bet money on. So a position would be QQQ, a position would be FSTY, and whatever's coming out on this list. So one of the things I always do on these lists is rank them by industry group, top to bottom. So this used to be number 1. It's fallen to 8. So Thor's a good one to look at because, especially on the weekly chart, because this is the thing of beauty. Because you had a firm uptrend, you had a nice correction. So the question was this all stage 2 or was this a continuation? On that earnings report, it basically said this is going to be a continuation. It put the flag across, and you waited for earnings, so you could have bought a position at the 150 or the 30-week line as it came through there. So as soon as you see this 3-week print right there, whichever average is closer, the 30 or the 40-week, buy right there and go with the 3% to 3.5% stop. That's a good entry position. If you would have done that right there, got in at 100, 40% gain. And then you basically just write it up. So once you get a 20% gain, you go to the daily. And one of the things that I do is start tracking essentially, you see how this advance is going. So you're in the green profit zone, so either you take some profit at the 10. So what swing trader does, especially when you have a leader, all they do is add the 5 MA and the 10 MA, and they sell half the position when it comes down through the 5 MA. That's what that service pays. So for $49, change your average to the 5 MEA when you're wanting to lock in profit, and just go to town. But that was a clear. Once you see, again, this is the power of 3. You got the moving averages, all the 10, the 20, the 50 coming up. You got volume coming in. You got bone dry volume. They're not selling off. Here's your sell-off of massive degree. When you don't have any high volume selling coming out of this, this is why I still hold Vertex, because it's basically doing this type of consolidation without the huge volume. Now, but it hasn't broken any of the major support lines. But Thor, that was the easy leader, and this is on the sector leader. You could have added a few shares when it went to the sector leader.
We're going to have to move through these a little faster.
All right.
I'm going to have to go.
All right. So the semi-equipment leaders, they're starting to break down on the smaller edge. The big boys are still leading. Go on, forward faster.
I wanted to be lucky. I was doing pretty good.
Hope you feel better tomorrow.
I will.
A lot of water.
Yeah, I'll be sitting here drinking tea. All right, everybody else pause.
There we go. So you're in the 20% zone. So I would just be careful. Nothing bad. It just needs to slow down a little bit. So to answer your question, before you leave, he had a question on the daily. Let's go to the daily on that. I worked on their equipment for 24 years. Pains me that I missed that breakout. For all the pain and effort I had.
If you're busy, what are we supposed to get?
Well, you're busy your own industries.
So a lot. They got 2 best practice manuals that they have for one set of equipment. They did the testing on 60% of those procedures in our fab, and the work that I did, telling them what their machine needed.
Which one are you on?
This one. So essentially, you're at the profit zone coming out of this breakout of the double bottom or base on base. You've had a good run. I would be locking in some profit because you're in the 20 to 25%.
I was going to say I got in on the 8th of September. I'm up 26%. You know, pigs get fat and hogs get slaughtered, right?
Trailing stop loss, like always.
Yeah, I put a tight loss on it.
Well, if it loses to 10 and tests to 30, you got to be going. You know, like if it tests to 30, it doesn't come back. If you want to try to keep rising.
So what's the 10-day moving average?
Well, not
I would not let it. I would be.
Have you used the 10
10 5 or the 8.
Okay.
But I would at least lock in some profit.
Do you guys scale out of your positions typically? Like if you're doing a trailing stop, are you scaling out like in percentages,
I'll
or
probably leave mine for
are you just doing the whole thing?
Because this is getting late stage, and I know what on the equipment guys, this group, I would be scaling out. I would be locking in all at once.
All at once.
On this trade, because this is the late stage base and it's parabolic. The SMH has just printed a new all-time high. And the fact that the semi-fabless and the manufacturers just went from industry group 80 and 101 to 30 and 31, and the equipment went from 1 to 8, and you've had the small cap equipment start breaking down this week with earnings.
Yep.
It means
Take the money and
the
run.
buy orders are going down for the equipment so that they can get all the new equipment producing material goods. That's what the Sky Works, that's what Texas Instruments told you, that's what they're all breaking out right now.
So who makes
when the equipment breaks,
equipment that makes the equipment?
Huh?
Who makes the equipment that makes the equipment?
Lam Research, Applied Materials.
Actually make the stuff. Make the
So the AEIS supplies components to the equipment guys so that they can put the final components together. So the smaller guys are going to be the first ones to go because they're not getting orders from the big boys. The guys that have the big equipment, Excelis, Lam Research, Applied Materials, those type of companies are the bread and butter equipment. UCTT has a mix. Part of it's major equipment, but a lot of it's components for stuff for these companies. So it's a mix. But the bottom line is, you can't, the orders stop going until they get that wave of equipment into use. So these guys are now turning over to contracts for maintaining the equipment they're installing. That's where they're going to be making their money. And just like the car industry, it's, once you get through that, the money's being made. They're getting their money by servicing the cars. So Applied Materials, the other one, this is getting extended. I mean, this is just an incredible run.
Yeah.
You haven't really tested the 30-week line. So that's a solid 2 years. What's O'Neill say? 12 to 24 months?
Yeah.
Where were we?
Huh?
Where were we?
So this is the third. This is probably going to fall off the list very shortly from the 90 screen. And it's basically saying it's getting close to the end.
When they go, Dave, do they drop hard?
Yeah.
Can we see a monthly? Just would that show anything?
It's going to show straight up.
Fair ball. Yeah. Yeah, look at that run we got going this time.
It's going to drop hard, isn't it?
40.
It's going to come down through here.
Drops 60, then 40.
So remember in 2000, or composite, or the S&P 500 in 2007 came up to all-time high. It barely got over, and then semiconductors just got to an all-time high, and you just had 2 earnings misses on the equipment side. It's not there yet, but we're getting close.
Is that short?
Not yet.
Not yet.
No.
Not in bull
Tell me
market.
when.
When they're not on our growth list.
Well, you got to wait first.
They need to be. They need to be off the IBD 50. They need to be off every list.
It cannot be.
But once they go, well, they go pretty quick.
They will.
Looks like.
Is there an index for
SMH.
them? SMA?
So Adobe. I mean, this has been a good one. Just an earnings machine, but the reason why it's kind of missed, so one of the things that I did was build one screen that should help us out. I will go through that when we have the next correction, but right now the stocks are just too extended. So again, here's one that basically, this is kind of a square box feature. As you recovered the 20-week line, you could have added a position once the earnings came in, but the earnings basically drove that, so that would have been a hard one to buy.
We got that.
So why? I mean, this would have been an easy one if you were just using, because as they came on to the sector leaders and broke out of this consolidation right here, getting in at 50, they go into the daily stock. You can. I should have held this all the way up.
There's my trade.
Nice.
So 50 breaking out here. The market's not rolling over these moving averages. You could have added some shares. You could have rang the bell, but this told you to hang on. So if you basically bought when it came on the sector leaders, you added through this space. It allows you to hold through this 25%.
I added here and added here, and then I sold some because I didn't bring that in. And I sold it all.
But I would have rang the bell when we got near 98, because that would have been a double.
Got 61. 90.
3 months.
So a line, now this wouldn't have been coming through the screens until late, but it was coming, it was on the IBD 50 list. If you just held through this, when it first started showing up in the newspaper and held, and the biggest key are these gaps. You had a negative earnings print, and you responded well to, where's the negative? Right there. You immediately recovered, and that could have been your entry right off the bat. Because that 3-week support of this last, one of the things that I am now looking for is the last 3-week support from a consolidation that tests the 30-week line. I look to see once it gains that support, that's an entry. And that's actually the cup with handle entry right there. So I'm using those 3-week supports when the consolidations, when you have a consolidation from this going down to the 30-week line, basically a buy point is when you draw a line through there and recapture that. That's kind of one of the points in that technical analysis book that you have. Extreme networks, ANET's the clear leader in this one. So you could have been buying when you bought ANET, but ANET was the opportunity child. And ANET, if you were just following the sector leaders, it would have had you in somewhere right here. And that scary shakeout, look how that 3-week tight held.
Yeah.
So one of the things that you can do is the 3-week, the lowest close of the 3-week tight, that can be your stop loss. 10 cents below the lowest close of that pattern, that can be your stop loss. Once you get back above the 10, add to it, and then you're set. And that allows you some flexibility as you test the 20 and 30 week. When these runs start, you have at least one test of the 20 or the 30 week line before the run's done. But now whether this has violated anything, I don't know, because you now have another 3-week tight.
Right.
Earnings are coming up, so I would at least take some. Have you sold this?
Yeah, thanks for the email. The railroad track scared me a little bit. I took some off the table, but it never really hit my stop loss for the others.
But I do know that when you count to 1, 2, do we have a third gap? Go back to the. All I know is when you have, where's the earnings? So there's one gap. There's, I don't know if you really have a gap there or not. But you definitely have one there. You definitely have one there, and you don't have one yet. So there's at least 2 gap ups off earnings. So it might get a third one like a line did. But I would consider that a high risk. Because this used to be number 4, and it's been toggling between 34 and 45 industry group. Into the moon. And look, if you're looking at monthly charts from an IPO, if you were following this, an entry would have been when these two came together.
Yeah, there. But here's another beautiful entry too, right there.
Yeah.
Draw that line in your market, Smith. Don't even watch it when you get ones that look like that, like an IPO that you think, and then let it hit that line, and then I've done well doing that.
Squares. Put up squares. The opportunity. That's something beautiful too.
Just keep it there on the monthly. Boom, 18.
Yeah, 18.
Just switch.
Double.
Double.
Did you?
Wait, you did that.
I did that.
Wow. So I didn't hold it long enough.
See, he's following my advice. I just need myself to follow.
I got in a little bit late,
So
I was flying around.
Yeah, I got square from you, and I got the name was this
too bad I didn't buy that. I told him to get
You
it.
tell him that he can tell you.
I need to
I'm
give
afraid.
him my money so
I'm
that he
afraid.
does it when I tell him. And aren't we glad we got out?
Yeah.
Because they can get ugly.
I got a 142 on this one.
Yeah.
I own it.
Do you still own it?
No. God, no.
So that was painful.
You gave plenty of time to get out too.
So one of the things that once you've had a test of the 50-day and you go below it, you shouldn't see another test until these basically go up in an uptrend, because it should be coming down first to the 10 days, then to the 21-day, not immediately down through both of them. That was your clue to get going on that day right there, because you didn't have a normal test of the 50-day right here.
Yep.
But it wasn't a strong later because it doesn't have the, you got to be wary of stuff that's not 25%. It's a mega cap. It's hard to, the power of big numbers.
Well, did we do NVIDIA yet?
We did do really good.
I'm sorry.
So NVIDIA is still my favorite stock.
Yep.
Why it's not on sector leaders is beyond me. But you talk about the paper printing, the charts. This was number 15 on the weekend of somewhere around right here. It said buy it at 33.
Yeah.
Whatever.
Yeah.
If you bought that 33,
8.9.
you would have 200.
Right.
So there's your 6x trade.
Go home. Yeah.
So this would have been just, okay, AA.
Remember
So
we
another,
talked about that a while back, 2 or 3 months ago.
We're talking about money. To get into it.
all right.
He's
Anybody
not
want
excited
got
about that.
stocks they want us to look at?
Tesla, tomorrow they report.
So GM, so this is a stock that you should look at per Stan's book. And you look at just the I got a chart set up just on the 4 months. So when you're printing new highs, based on what he's saying, the market's looking good. But when you start consistently making new lows, start paying attention, okay?
There's my trade.
No,
Buy, add on, sell. And yeah, I didn't grab the top, but I took the profit. That's a pretty good chunk.
So
You've been rolling.
so look at rate.
Had a good year.
You know? You know, you're not going to get the tops on all those, and you're not going to get the bottom, but if you can do that.
So this puppy breaking out. Look at all these pocket pivots. It's not done.
We have to go it on a weekly. I mean, these are the ones that we should all have our heads examined for not.
I decided to buy this today. And the son of a bitch opened up 5% above where I was going to buy it.
That always happens to me.
It is the third stage.
I stare at this every day, and I finally, okay, I'm going to buy it.
So many opportunities.
It's not breaking down.
Step right up. When they do that, that's powerful. Base on base on base on base.
So when they do a 3-4 week
gap,
tie
gap.
above the 10-week line,
But
it says I'm going up.
now it's getting.
But it's got earnings, so it's still gonna.
Well, it may give us a buying opportunity, Tesla, tomorrow.
All right, let's go.
Okay,
Don't give it ego a boost here.
Yeah, right.
All right, I want to start with the fundamentals. Go to the weekly, and I want you to pay attention. So on the weekly,
Yeah, the daily is horrible.
one of the things you want to pay attention to is the composite rank. It was above 80. when it was doing all this crap.
Yeah.
It is now 50. You want to be gone, once your stock is 80 and above on the comp rating, and it doesn't improve, if you buy it when it's 80, you need to be gone before it gets below 75. Alta will remind you of that. It was 97 for 2 years.
Yep.
And then all of a sudden one day it was 80. It's 50. So if you're betting this is going to win, good luck.
They can't make cars.
Look,
No. Their production.
you have a head and shoulder breakout, phantom pattern. You have a head and shoulder
Nice.
breakout, phantom pattern, and then you're testing just, it's almost become the perfect short.
Mm-hmm.
The shorts are,
It's a little late now to get like.
it's going one way or the other. It's either going to come, if it gets above 363, it's a buy. If it gets below, I think it's, you want it to be below right there.
300 or so.
I've seen too many of those pull back up to like that 350 and then peel over like a rocket.
That's what I mean. That's why I say the breakout for being long is 363. I wouldn't be, if you buy it now, that's not even a pocket pivot. Look at that move today. You went up 3.5%.
All right, what else we got?
And you got 3 negative pocket pivots.
Look at the short interest.
I don't care.
30%.
Look at the negative. You got 3 negative profit. If you pay attention when you're buying, you got to pay attention when they're selling. I wouldn't be in any position in that stock. Anybody else?
ELF.
Oh. Well, you're in a stage 4 decline, and until you come up and get it close below the 30-week line, you're in a stage 4 decline. You don't transition to stage 1 until you have a close that fails. You got to have a close that's just above the 30-week line, and then you need one more test below. So until then, stay away from that stock. And guessing how to get there, it's not worth it. There's other merchandise that's in uptrends that's better. And look at Alta, why we're here.
Yeah.
We haven't had that up
It
in a
has seen
while.
better days, I think, after they themselves.
Well, the point that I'm making on the comp rating, so this was a stellar.
So there's your question: how hard do they drop after they've done the run?
So when we got right here, that's when it broke 80, right there.
70%
Yeah.
retracement.
So we came before behind it.
Yeah. When they put the second store.
We put the second store in Fort
Fort
Wayne.
Wayne. We have the Fort Wayne indicator.
Yeah.
When something comes here,
Get out.
it's over. Just like Mexican Grill.
That's the one.
No, because they're in a small area, they're looking to expand.
I just showed you the phantom head and shoulder pattern on the RS line.
Yeah.
Look right there. The phantom shoulder, head and shoulder right there.
Yep.
Tesla's
That's
showing the
amazing.
same thing.
That's
But
absolutely.
I think to this one, and we've seen a couple other ones, like you questions people also. Sorry about your name, but I mean, don't we have this saying, when the stock wants to go down, it comes down with the elevator. When it wants to go up, it go up the escalator. Right? I mean, it almost never.
And so you look at that and you think, okay, that'll be easier to make money on the short side.
For you guys that play
But
short, I don't.
But it's not.
Yeah.
It is totally
No,
not.
not in the bull market. You don't do it in uptrend.
No. Well, we haven't had a bear here for a little bit. We will. But you got to be quick and nimble.
But look,
Tesla will give opportunities in the future, not now.
Well,
We'll
the
wait on that.
Tesla, the
We'll wait.
options
They have production
are
problems.
still.
Once you start ranking it up,
Yeah.
you line.
Right.
on the
Are they bullish on the options? So you
They
can
are.
sell
The
premium.
customers are there.
You can, if you want to sell premium, I mean, I don't know. Probably, I don't want to touch it tomorrow per se, but options, we're bullish on the call. I mean, there's a lot of calls being bought on Tesla versus the puts in the weekly front this week, next week, and even on the monthlies. And so there's not a lot of, in the 340 level was kind of the area that they were looking, they were loading up. So I think they're thinking it's going to break 340 if it breaks. Again, I don't know. I mean, for earnings, that's, you know.
Just such a
It's
high
kind of
profile.
gambling at this point. You don't know the trade.
I
It's
think
such a high
there's been a
profile
place to have
stock.
your
Look,
money.
that's what it is.
It's
Got a
hard to
great
trade.
story. And
Yeah, I mean, I've traded it for a long time. It's hard to trade, I think.
The
All right,
story
well,
is going to
yeah.
be when Tesla is sold out to GM so that Elon can
Exactly. I was going to say that.
Yeah, that's.
You guys would say I was nuts.
No,
I work.
the paper just showed the next experiment he's doing already.
Yeah.
How many companies is he going to fund? Why he's trying to make Tesla the automobile
Well, I
company.
think he's proved his point with Tesla. I can do this and be with the big boys. Now it's not a bad time to go ahead and say, okay, all I really want is the frickin' storage to buy.
Does he really want to sell it to GM?
No, he wants to go to Mars. That's all he wants to do.
That's going to take a lot of capital. So where is he going to get it?
All right, so we're trading. So anybody else?
Tear it apart before they buy it.
Was this somebody?
I just was throwing stuff up here.
Anybody else with the stock?
Put on Netflix. Haven't done that in a while. NFLX.
Should I sign? Wow.
It went down today because of Kevin.
You know what?
It did. It dropped today because they suspended the production of a house cart.
Oh, really?
Kevin,
Oh, yeah.
bye-bye.
What do you want?
The wicked character got wicked.
Oh, so you got
I've never got my
upset
arm
one
around
on
that.
money or something.
Oh, no.
So
Sexual
the Livermore,
14-year-old boy.
so the Livermore
Oh
rule
my God.
Yeah.
right here,
A little more room.
Sexual.
the century mark. Once you get to 200,
Oh, yeah.
you can't break through.
Yeah.
Can't break up through 100. It falls quickly. So it's testing 1, 2, 3, 4, 5 gazillion times.
Okay.
So we'll see.
Put up Apple next.
Yep. Apple. $1,000 phone.
Yeah. Tomorrow, Friday,
Oh,
right?
yeah, Friday.
You buy one? You going to buy one?
Did you buy one?
No.
Yeah, I think
I got this for
you-
$1. It's on the 4S. It's been great. But I mean, I'm in the. I'm playing the earnings tomorrow with options, so
So are you long or short?
I'm long. I've got a little in there.
So I decided to play the semis. So the semis
I hope
are
you're right.
going good.
But
I hope you're right.
I do too. They're real bullish up to
Yeah.
on the call side. So
So what are you doing on that? Straight calls? Or?
just straight calls.
180?
I got 180, I think 180, 250s. I'm building a position on the call side
What are those?
with weekly options.
What are those from?
I forgot because
Oh,
I can pull.
never mind.
So one of the things that once you see this happening and you see this forming, you can basically put a buy stop limit above about 20 cents above the 50-day moving average to get into the position.
Yeah.
So if you look right there, Sam, that day right there,
Very nice convergence there, the 10 and 20, 50.
so the 50-day you could have been in at 158 at a buy stop to enter a position, and you would have got that gap going, and you would have bought the breakout. So that's a way to enter the position. When call that line up again, please. The point that I'm making, when these moving averages come together, so right here on the day before, you see how these are within 1% of each other? So whenever they're like that, you can put an entry position when it gets up above the 50 as an entry, and then a 3% stop. Because 3% means you broke down through all three moving averages again, and it gets you out. So that early position, but it's a way if you just, once it moves above all three moving averages and gets going.
Perfect five, Steve.
What?
Gotta be brave.
Right there, that's where I bought the store. I didn't hold it. I don't care about all this garbage. You can have that. I want this.
I've got 165 and 170 calls.
And what are they running?
170. They're weeklies. They're front weeks.
Okay.
345. I think they closed out at today.
Well, so they're not super expensive.
Not super expensive.
Anybody else?
Facebook?
Yeah, Facebook.
Today, tomorrow.
I think today's tomorrow, right?
They're tomorrow.
After the close tomorrow.
Yeah, I've got 180s and 18250s on Facebook.
180?
180 calls and 180 calls. Okay. So I've got two.
So the 10-week line would have been a good entry. So go to the daily.
I haven't had time to do all this because I would have played some spreads on earnings and that, but I don't have time. That gives me an idea about what you've done.
So good base on base.
340, so they're not.
430 on the other one.
So go to the daily.
Not too terribly expensive.
No.
You're under accumulation
$180
during this
product.
base right here. You got several pocket pivots that are kind of trying to match that big downswing, but you didn't have further price progress or any more selling. So either drawing the line at 175 and getting long, or buying there on at the 50.
Well, you got 3 days. You got 1 day there come down hard, and then you got that day closing. So I prefer to get in at that next entry there up hard. But I'm tired of facing that.
To me, this is getting to be a little wide and loose, and it's been there a while. If you go to the monthly,
I think Apple has a lot better potential for breakout tomorrow. You know,
People just like Facebook.
It just,
yeah.
at some point, it needs the,
Pretty parabolic.
yeah.
So it's got 1, 2, 3. Losing volume on its own.
I think,
That's not
are you in Facebook?
Yeah.
I would be at least protecting some going into.
Well, you might. This could be a 4th. Also, let's look at it over here. They're calling that a 1.
That's what I said to us. But he has a lot of good.
That it? Anything else? We don't have anybody here giving us real loser. You got anything you want to put up there and we'll critique it? Think of a company? Anything. If you're here, you're probably thinking about something. Normally.
I'm planning put in OLED. I'm planning this for Apple. That's it.
Yeah, I did too.
They're talking about Solana.
Which chip?
The little chip that's, it sits on a dime.
Look at that blue dye. I don't know. It says go boom boom.
Yeah.
Light.
Turning
Or light.
Says, I broke out.
What's that?
It's like a little chip that they're,
Yeah.
it's been big black on Facebook talking about it. Like a little
What's
chip.
the company?
That's what he's trying to think of. Some small chip that converts light. Light and sound. It's a new company.
Who's that? Yeah.
Can't look through big numbers.
One of our big rules on investing, and the problem with Facebook giving you tips, is you get these small traded volume stocks. And so like they only trade 100,000 a day or what, we want to see 300,000 shares traded on a daily basis. The reason that is if a mutual fund company or somebody comes in there, they can just dive bomb that stock on you. So those little stocks, a lot of times, if you're going to play them, you wait for it to be an IPO base. It goes through this base, consolidates, the volume starts to come in when the big boys are starting to buy it, and then move forward from there.
I wish we could go back to
You know.
February 2016.
Me too.
Whoa,
Yeah.
beat the week.
Yeah, it's easy now.
With a lot of cash.
That's what they do.
And you know what? We said we wish we could have gone back to October 2014. We can't wait for a correction. Oh my God, if we weren't ready.
wanted to get.
I wish I could go back to August 2 months ago. Even I was pretty long that whole time. I did pretty well.
People that are long and want into it.
But I told
And then people that are short.
Well,
and money because they
yeah.
cover
I sold.
when stocks were up first.
crap I held.
You used to do that with penny
It's the
stocks.
crap I
Here's
didn't
what I'm
held.
talking about. Yeah.
The crap I sold.
That's a low, well, it's got fairly good volume.
Stuck in.
That's an IPO base.
All right, I want to show you two IPOs. Goose, Goos.
It's coming back to life.
Look at my tablet.
It's got a pulse. Boom! Looky there.
Yeah, that's
It's
nice.
Goose.
Clothing.
Canadian.
Goose down.
Goose down clothing.
Got a
Perfect.
lot of overhead there. Right here. Got to break through here.
Yep.
You can't use
It's a
the
nice
blue
handle,
there.
beautiful handle.
So look at the pocket pivots. Go to the weekly.
Yeah, this is just in the paper.
Yeah.
That's when I missed
Setting
it.
up like a square there, huh?
Yeah, so buy when it gets above 24. All right, RDFN.
You don't have to wait that long.
You know, you can buy it.
Oh, I bought it. I bought it 3 week tight. So
Yeah, well, what I'm saying is you can buy it. You can buy it when it goes through here above that blue because it is an IP.
okay, I might add a few more shares.
Well, you probably should since you're in it.
RDFN.
So what about Wish?
We'll put that up next.
So pocket pivots are starting to show volume. One thing that I like to do
What is this?
is it's the real estate way. This is changing the real estate market. They're being the broker at a cheaper rate to put the brokerage firms out of business.
Disruption.
You draw a line connecting the red line downweight, and when you kind of see that downtrend end, now this needs to get moving, but it's at the bottom of the base right now. But
You can put a line here and wait for it to
you
come
basically
through.
got the IPO failure right there, and now you got a double bottom that's forming.
What's the earnings and all that on this thing?
And it doesn't have earnings, it has sales. So it has a small float, but management's buying stock still in the open market. They own 32%. It's a company that basically will have, it's kind of like Amazon, they're ready to turn on profits at any time. They're still getting places in place beyond their initial markets.
What's the market cap? 1 billion. Okay, 1.2.
So it's a pretty good market cap.
So it's internet retailer type?
Okay, I set it and forget it. Till it goes through there. I ain't worried about it.
About RYOB.
RYOB.
You're not the RYOB.
Did I get it?
Nope.
Okay, what is R
Yeah, the digits.
Y O B?
Here it is. What?
Did I do it wrong again?
I think you got it.
Well, evidently not. RYOB?
It's that IPO, one of the China education stocks.
Oh,
IPO. You know what I'm talking about.
yeah, I don't know.
What's
the hot IPO?
What's the China? You're talking the
Never mind.
training ones. Probably show up.
These look like they're done.
Well, if we go here, then we go here.
Yeah, it might be on this.
If it's got any kind of number.
It's an IPO.
EDU,
So
HLB.
because all these started.
Because there's a new IPO that came out.
Okay, he had something. What did you have?
Wish.
WHIS?
WISH.
WISH. Everybody yells me these number things, and is that it?
Yeah, that was not recognized.
Didn't pull
That's
up.
a nice trim.
That's not it. So here I was going through my IPOs, new what I call new issues, when I got stopped.
Anything else you want to see?
No, okay.
RYB.
I have an hour and a half with you.
There you go. I've heard of that one. R Y B. True. For that. Ooh.
Okay, when should I buy this, Dave? This is going to be a hot one.
Right through there. Connect that line to that line. And forget about it. You can set one right here.
Do you have it in there?
Okay. You buy your first 1,000 right through there. It's got to get through here with some good volume. And then you can add right up in here. So you can nibble when you probably... Or gain those two lines.
That's 27, 25.
It's going to be a hot spot.
Why?
Because they're doing children, focusing on children.
You guys ever look at solar energy stocks lately?
Yeah, we should look.
What's solar? Let's put the FSL on and see that.
It's garbage, I tell you.
Sell.
RX is going up. Today was a bad day for it, but last 2 days before that was good.
That's all right.
Let's go look at fundamentals. Oh, we are looking at fundamentals. One of the things I don't like is that, because it's nowhere close to 785.
Yeah.
You're only one, and you're projected. Stay away from it.
All right. Stay away from it.
So anything in here was good.
And
All of
besides,
them are the same.
it's gone from industry group 1, top 5, to now it's, I think it's breaking down to 40. Where is it? It's still an A, so it's somewhere around.
Try this one. You guys did Bitcoin already? What do you do with that thing? You buy it?
My buddy, I got
He's now a Bitcoin player.
5 years from now, what do you think will happen?
Monero. It's cryptocurrency, yeah.
Well,
He built a computer to mine it.
That's what everybody's big thing is.
Yeah,
does anybody follow Gil Morales?
Yeah.
The son of a bitch wrote an op-ed on his Twitter page yesterday that says, well, I bought gold in 2000 at 300, and Bitcoin reminds me right now like gold was in 2000. Buy at 300 and then it goes to, what, 2000? So the son of a bitch was glowing today because he said, hey, we had a pocket pivot close yesterday of
Bitcoin.
GBTC. So we're going to interrupt your IPO run and go look at Bitcoin one more.
The thing is it going to be around 5 years from now?
You guys spelled B right, though.
Really foolish.
Easy.
I had it up there, man.
I tend to stay out of that.
So he basically said pocket pivot, which is, it got a pocket pivot by 5 shares, essentially. But, so I bought today at about 820. Essentially coming out of this breakout at the go to the weekly. I basically, this looks like a high tide flag on top. This reminds me of Taser in 2004. So Taser comes out of this space, high tide flag doubles.
Yeah.
Does a high tide flag 2-3 weeks doubles. So that got it to $8. So it went from 4, or it went to 2 to 4 to 8, and then it got exciting. So here's where the exciting got. It came crashing down, did this nice little double bottom for the flag, and then it doubled. That's what Taser did too.
Isn't that when one of the exchanges got hacked? And then
Yeah. The ones.
Yeah.
People lost money.
A lot of people lost money because, yeah.
They changed the algorithm or something.
And then they changed it.
All I know is there's a billionaire little kid, about 11, that started a bee farm on Bitcoin. He would only accept Bitcoin for his sales. This was like somewhere god awful over here in 2000. About the same time somebody bought a Papa John's pizza for 10,000 Bitcoins. A pizza. And now look at it, they could have been billionaires. But it's, so I'm catching the fever. We'll see. I bought a share. The thing that I like about it is...
I bought at least one share.
One share?
Just know that I was there.
I have a position.
So you tell the grandkids, back in the day, I had one share.
But if it doubles, I mean,
I'm gonna have to buy
that's
a
$800.
I'll keep it.
Just one.
My buddy, I gave him a little bit of money to help build this computer. He's
Everyone
a
else did.
computer guy. And what he's doing
That's
is
the
he
wrong
wants
time to
to,
do it.
he's,
The thing is, I
mining
screwed
the
mine up
Monero,
listening to Quantum.
crypto,
Can you get
and
options
he's
on
using that to
Bitcoin?
buy Bitcoin.
They're in you.
So he's not even really doing anything other than buying Bitcoin through Monero. But
Oh,
Monero's
that's
easier
dirty.
to mine. He uses less computing power.
Yeah, but this is the ETF. The GBTC is the sort of the,
Yeah.
so that's a little bit safer to do that.
Oh, of course, yeah.
So
The
I'm-
SEC still has to rule on GDTBC if it is actually that meets all of the requirements.
We got at least 3 years. As long as Trump's in the White House, they won't be.
Well, they were supposed to do it here in November, December, where the SEC or whatever, the Federal Trade Commission.
all I know is that looks like a
That's a
high-tech
beautiful
flag.
I got 5 for it.
So I bought a share.
Nice
But I found it at 105, and
Buy a share. I bought your gold. You bought my PPT. They're both doing good.
Yeah.
Buy a share.
Did you-
Now, if it adds a dividend, really buy a share. Oh, by the way, so here's a story for you. I'm trading tips with a guy that did some work at my house. So he shares, the founder of Papa John's is a big Louisville fan. So this guy gets invited to a suite at a Louisville game. And he's telling about all the neat inventions. And he comes out of that football game, I'm all in. So he sends me a text. I found out about all this neat stuff that Papa John's doing, and it's right here, as it fell out of that 3-week tight. And he goes, what do you think? I'm thinking, man, that's an ugly chart.
well, that's a good chart to look
That's
at.
a good, never buy on rumors or tips. Look at the chart first.
I go, well, so I couldn't find any hope on this chart. So I went back to the daily and I started looking at the daily. So go to the daily, and they did report.
So when you hear that, that's a shorting opportunity.
So he basically bought it on, I think the first weekend of September. So it was around 70, and his entry was 71.50. I said, well, it better hold 73, or it's going to get ugly. And then it comes down to 68.68. You still in? Yeah. I said, well, at 68.68, whatever that low of those 2 days together, I said, be gone if it takes out that by 10 cents.
Yeah.
So I don't know if he's out yet.
Take your money and buy some pizza.
But
you can get something out of it.
That looks like a shorting.
Sounds very good to me right now, pizza.
Oh, that is fun.
How about the?
Yeah.
I would stay away from that. China looks like it's ready to blow over.
Chipotle, buy that.
What does it look like?
Where are they at now?
CMG, just taking 200 maybe?
Let's flash back to 2013 and have a replay.
We all should have
Oh
had
my
our-
God, 260.
I was about to buy right there.
Now when
It's a value play.
when it comes to Portland,
And that was done at some point.
Probably about,
So,
I don't know.
No, it's got a ways to go.
2013. Where's the nose?
that'd be-
Yeah, we can't find it here. Go to the weekend and put a 4 on there. So if you ever find a stock like this that just prints 1, 2, 3, 18,
It's up in the room, yeah.
it was coming out of the 2011 correction. That was your leader. You remember Green Mountain Coffee Roasters?
Yeah.
Green
yeah.
Mountain and CMG were the two
Also, at the same time,
monsters.
Lululemon was also doing the same thing.
Lululemon,
One was very well.
it got bought out.
Lulu,
L-U.
it's still around.
So the 2011 coming out of that turmoil,
Look at that.
That's
it
14.
came out of this right here.
Yep.
It was a double bottom, they said, and it blew out of earnings.
Yep.
But here's a nice run. Topping. See, there's your 2, 3 over.
How about GoPro? Put GoPro.
Oh yeah.
GPRO.
You need to go to present day. You need to go to.
Did you? I never looked at it.
That camera thing.
It's above the 30 minutes. Oh, no, that's the. Oh,
That guy was on television and everything. Everybody was.
Hey, look.
Tomorrow they announce.
You got through the round?
So earnings, I predict earnings are going to be bad because you need one more test down. But oh man, the
That was so.
fundamentals are so over.
Yeah, one holiday season. That was it.
I made some money on it bad. Now I got rid of it.
What a short
Founder used to have his feet on Shark Tank, I remember.
Yeah, when he got on there.
I knew it was done. He was no longer focused on his company.
All right, here's one that keeps clumping around. When we get into oils and stuff. Pass forward.
Fang. It's the oil company, Diamondback, yeah. Some life yet, but right side of the place.
Did you buy it?
No.
Broke your trend line.
Now the
Yeah,
new,
I've raised it 3 times.
the new America stock 2 weeks ago was Cabot.
COG.
COG, and they said that is going to be
It broke out today.
Why?
because of natural gas. It's got the cheapest natural gas,
COG broke out.
and it's going to be phenomenal. They say COG, and it just went beyond the buy point. So I'm going to buy this. Look at the earnings in 2018. It's going to be the natural gas stock.
They're like the biggest player on
But
the
it's
game.
still not getting anywhere close to here.
Read down to America article, but 2 weeks ago.
Yeah. No different than Presley Energy, PE.
All right,
It was in the
we're going to
American-
flash to the past. Here we go.
You watch this stock, son. Okay.
Oil. There's your oil from the past.
Bye.
What do you see there?
Nothing.
Yeah, you do. You see a lot of green,
See a
and you
lot.
see some
There was an
volume.
ETF.
So there is some money flowing here.
Absolutely.
So RYF, RYE is the best. If you're a Schwab trader, this is commission free for the energy, equal weighted, and it's basically living on support on the 30-week line now. So
Well, it has a lot of look, just like when corn
Yeah.
does. But there was all the ones in the last
look at that one. That's supposed to be the Permian play. It's associated with Fang. Look at that.
There's
Hey.
life there.
So look at all the 7% dividend.
That's nice dividend. Is the dividend safe?
Yeah.
How can it tell?
They're printing money.
So what do they do? Dave?
So go to weekly. It's a pipeline.
It's pretty low volume.
Some insider buying also lately.
That's why, because I just decided to stay with PBT since that's a monthly.
Yes, you told me about.
What is that ticker say?
BNOE.
I'm gonna write that, babe.
So my PBT, look at that one.
Let's see you guys.
Yeah.
Thanks for coming. Hope to see you back.
Bye-bye.
See you.
Come back to this.
See you next month.
Oh, yeah.
Hey, if you got any questions, don't hesitate to continue.
Go home and read.
Oh, yeah, I'm definitely.
Get the first book.
Boy, P. Paul, Boy, Tom.
And that's it.
So this is a monthly.
You just want to watch World Series.
No.
He wants to puke.
Yeah.
So double bottom, monthly dividend, 7%. 999 return on equity.
It's not quite good enough. Can you get something better?
Well, that's down from 1,340. It's in a downtrend. How it got in a downtrend is beyond me.
I bought it. I got it. I got one dividend so far in it. 1 month in.
And you got another one since you still own it.
Yeah, we have.
Printed today, didn't it? I think
Was it
the
today?
next dividend date was today. So you got another one. But that's the one we're playing.
7%.
Now in one more.
GGN is our last one. So if you want a gold play,
I don't have
this
any-
is another monthly
I have to
dividend.
pass.
Need to do it.
Do these in IRAs. You don't want to do these have K2 schedules.
Yeah, those are fun.
So you don't want to do those in taxable accounts.
Okay.
You drop them off at your brokerage.
All the sheet.
Run.
And some of them don't come till after you have your tax return done.
Well, if you do them in IRA, you don't care.
You don't care, but if you go stuff them in your regular account,
But it's at this is a monthly dividend.
Yeah.
Tim got me in this, so I basically, it's bigger, but start a small position.
Yeah, thanks.
See you, Dave. If it comes crashing down, it's a 10.9% dividend where it's at right now monthly. So
Made a lot of dividend money.
that's one of around 20.
Yeah. We do options.
They have options on this?
No, they
Oh, man.
how they earn their income, the earnings.
Oh, yeah.
They carry the options on it.
right, the near option.
Oh, I'll be glad I'm gonna do the new tax plan. I want
So do you like the yours here?
Yeah.
My daughter goes there.
Okay.
Yeah.
She there currently?
Yeah.
Yeah. She looks good.
I've got
Hey, can
her.
somebody fold that screen up for me? I don't feel like bending over.
How do you do it?
On the back side, there's 2 tabs you pull them, and then the top comes down, just kind of right out. Just bring it out from the walls. Yeah.
Bring it out.
Yeah, there you go. You'll see that handle. Just hang on to the top though, so they go in.
Did I get my orange book back?
Well, they're not tabs.
Oh, right.
Pull it in.
Here, you just pull it out. It just teaches the shit out.
Hey, did you collect the orange
Yeah,
book?
the top. You can't
Sam?
see back there, huh?
No, I can't see.
Did you get my orange?
And then you unhook that top. What I need to do is bend over like this. Yeah, put her down. And then you just hold that, and then I got 2 bunny straps back there, you wrap it around it. Get some teeth back down so that hold it up.
Good job, fellas.
I think you get this one down. Now, the hard part is getting the dumb straps around this. So I can carry it. I should have made a bag.
What bag has your book in?
My one right there. The brown one under my coat.
Oh, you want these together, right?
Yeah. It's fun. You got to wrap it around twice.
So we want this?
Yeah, you got to pull pretty hard. I don't have the energy tonight, so I'm letting you guys do it.
Yeah, I don't want this.
I gotta put that in my trunk. That's why they're. See, it is a little difficult, isn't it?
Yeah, it's kind of a pain in the butt.
Yeah.
We got 2 pieces.
I can't. I usually lay it on the floor and do it.